Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, January 10th. We are ending out the first official week of 2025 in terms of the stock market and in terms of trading. And we've got a lot of stuff to talk about, a lot of stuff that's going on today, a lot of stuff that's probably going to happen throughout the day based on the numbers we just got. But I think we got to just get right into it. I think we got to get just right into it and understand, or at least try to understand, a little bit of what I think is kind of a head fake, but nonetheless, it is what it is, and it's happening. Folks, let's get right into it. Jobs data is out, non-farm payrolls, and they are hot. Very, very hot. 256,000 jobs versus 165,000 expected. A little bit more than what I think we were planning on seeing in terms of non-farm payrolls, but nonetheless, we are here. That is good because that means a lot of people have jobs. It is not good because we are back to 2024, where good news is bad news because we are trying to fight inflation. On top of that, the unemployment rate went down to 4.1%. It was at 4.2%. Expectations were that it would go up to 4.3%. It is kind of insane that we have rates as high as they are compared to where they were for the past 15 years, which was basically zero. And the unemployment rate is as historically low as it's been in a relatively high rate era, because you don't tend to have unemployment stay below 5% for this long. So, yeah, we added 100,000 more jobs than expected, and the unemployment rate actually went up. Because of that, take a look at this. This 10-year decides it essentially wants to go to 4.8, 4.784. This is the highest 10-year. Last time we had anything similar to this, I'm going to have to go back to 5 years. Last time we had something like this was October 2023 when we were at 4.9. We have not had 4.786 since October 2023. We've gotten kind of close to it, but nothing that actually reached that level. So obviously the bond market is deciding to sell off bonds, particularly the 10-year, because they do not believe that inflation is coming down with this hot of a jobs report. On top of that, the Dixie is also, look at this candle, bro. It just goes straight up to 109.76. That's why Grab and Nubank are down right now in the pre-markets, along with a lot of other stocks, because that dollar going up is not necessarily the best thing in the world. 30-year just hit 5%. Yeah. So look, here's my take on this straight up. And then we'll talk about a lot of other stuff that's going on. The LA fires, as Doug says right here, the estimated damages are now $152 billion. Unfortunately, that also is inflationary for the broader economy. So there's just a lot of stuff that's probably like compounding on this narrative of inflation, which we're seeing in the data might be a little bit more fact than narrative. Here's my take on this. I kind of think the market is not going to care. And so we see a lot of red right now in the pre-market. Robinhood's down 2%. Tesla's down 1.14%. Palantir's down 3%. Look, I get it. I get this whole narrative that, okay, inflation goes up because more people have jobs. It's elevated. Unemployment rate goes up. That means more people are spending, yada, yada. There's two caveats to this. Number one, as someone mentioned in the chat, we might have revisions next month where we didn't add 250,000 jobs. We only added 160,000 jobs or 130,000 jobs. And the jobs that we added are not exactly as correctly stated as we've seen before. We've had these revisions in the past. So that's one thing that we have to keep in account. Number two is, even if we added that many jobs, I think inflation is still coming down, particularly around shelter. And if that's the case, we are going to have a situation where inflation comes down in other areas, and unemployment going down is not necessarily the only reason why inflation doesn't have a chance to go down. Now, obviously, it's really hard for inflation to come down if unemployment continues to go down as well, because more people have jobs. And we're not in the same era of 2024 where inflation was like 4 or 5%, and going down from 5 to 2 is much easier than going from 2.8 to 2%. But I mean, Robinhood was at like 39 in the pre-market. It was at 39.60. Now it's back to 39.92, meaning buyers stepped in. They're like, no, this is not a reason we're going to sell it off. Palantir was at 65. Now it's at 66.21. Buyers stepped in. They're like, no, that's not a reason we're going to sell it off. Tesla went to 387. Now it's at basically 390. Buyers stepped in and they're like, oh, we're not going to let it get this low. So I don't know. I mean, what is your guys' raw take on this? I know the data is not the best, and I get that these many jobs could be problematic for the idea of inflation coming down. By the way, traders have officially priced in one rate cut for the year. Now, and that rate cut is being priced in for October. If you take a look at the January Fed probabilities for the FOMC meeting, which is coming up next week, or in 2 weeks, January 29th, 97.3% chance we're going to pause. It looks like we're definitely going to pause for the next couple months, but if we actually get inflation to come down outside of unemployment, I think we're going to have more cuts than just one in October. But does that mean equities have to fall? I don't know, dude. I don't think equities really do have to get hit because of this. It's not the best thing for equities, but at the end of the day, people have jobs. That's a good thing, right? And this goes back to the good news is bad news is good news. But people have jobs. I think that matters more than anything in terms of avoiding a recession. This whole idea of how do we get inflation down to the target level the Fed cares about, it's nuanced, but I'd rather people having jobs than people not having jobs. SoFi right here getting hit as well, down 3%. Obviously, SoFi would benefit a lot from rate cuts, and those rate cuts are going to be delayed, which means, the market's pricing in that SoFi should have some weakness. AMD was downgraded today. That's why they're at 118. We'll talk about their downgrade later. They got downgraded from 175 to 125, I think, by Bank of America. NVIDIA down 2.5% on this. I don't know if that's justified based on everything we saw Jensen say. S&P, this is another reason I think the market's not necessarily sure about how they want to go with this. We were at 582. Now we're at 584. So we already had like the brunt of the pain at 8:30 when the data came out. And now you got buyers coming in and they say, no, we don't want equities to get as low based on this inflation data, right? And or this jobs data. And we're going to have to see how much they allow it to go down. Meta's down about 1%. Archer's down 5%. Risk on assets. Let's go to our risk on portfolio, our spec portfolio. All of these are down in the pre-market. Rigetti is down 3%. The quantum names are still down. QUBT down 2%. D-Wave down 1.8%. Kohler down 8%. Oklo down 1%. AMC down 1.5%. Faraday Future down 8%. Archer down 5%. SoundHound down 2%. Big Bear down 1%. MicroStrategy down 1.38%. Bitcoin also not loving this. Bitcoin at 93,000. But then again, Bitcoin went to 91,000 at 8:30. Now it's at 93. So it's one of those things where it's like, all right, how low was the market really willing to take this Bitcoin? Or it went to 92,754. Now it's back at 93.7. How much does the market actually want to take Bitcoin down? Correct. Traders are pricing in their first rate cut for October. Doug says, in my opinion, this is the dippy dip. You guys like that vocabulary, right? I used dippy dip a couple days ago. I see a lot of you guys using it. It's good. Dippy dip. In my opinion, this is the dippy dip. Earnings are going to be great. Margins will remain higher, getter, and an entire market betting on future rate cuts is silly. I agree 1,000% with Doug. Now, I don't know if this is the dippy dip because anything could happen that could create the actual dippy dip. But I do agree that an entire market betting on the future of rate cuts is silly. Like earnings and technology, innovation and margin expansion is what really matters. More than anything. So I don't know. We're going to have to really see how the market interprets this. Beneficial says this doesn't matter that much, but it matters right now. And that's how the markets work. Yeah, I agree. I mean, they have to sell off equities, especially algos, when you see that hot of a print. But is it actually that bad? I think that's the question. All right, let's see if we can get some coverage on this as well and see how the suits are reacting to this jobs data. As soon as I saw it, I was like, okay, this is bad. But I was also like, is it bad enough to the point where the entire market just like hates this? Like, is it that type of bad? And I don't know. I don't know if it really has to be that type of bad. All right, let's get some coverage from this, and then we'll move on here. As well. Forecast for CPI. We don't have that data yet. We'll get that data soon. But this might increase the forecast for CPI, which obviously could be bad next week if that happens.
Add those in, but just where we are, just from what's remaining from what the Fed was trying to do in the first place. We weren't there yet when they started cutting. And it doesn't seem like we're there. And this doesn't seem like, and the markets do not like this. And there goes the 10-year and the 30-year. Why am I wrong?
Well, it's like you come home and your daughter kisses you and you say, I'm afraid you're not going to love me in the future. I mean, right now, Joe, you got really good job numbers.
You're just arguing. You're arguing with the markets. Don't, I mean.
That analogy did not hit, bro. That analogy did not hit.
I'm just
Why is it
saying,
happening then?
I'm just saying.
Just talk about what is not.
First, you're right. You're right in the sense that the Fed had pushed aside this notion that employment was a potential source of inflation. These kind of numbers kind of bring it back in the sense that the payroll numbers themselves are hot. Unemployment rate has been, dancing around this 4.1, 4.2 number. But I don't want to awfulize this number, Joe. I just think it's the wrong way.
You don't have to.
I mean, the market can awfulize it all
What
it
is the
wants.
market saying?
I don't think it's right to awfulize it. Okay, I am going to argue with the market.
No cuts.
I'm going to put my hand down.
No cuts.
I think it's no cuts. I think that's right. But we're putting a lot of people to work. We reduce the number of long-term unemployed. We have a little room left to
we
go
always like
on
jobs.
participation.
There's always that argument.
Wages were not
We're
that
talking
hot.
about markets. There's always the argument that we do want people working. We want people getting.
I don't
great
let Wall
increase.
Street tell me what the right
Sometimes you
number
do.
of employment
Depends
is.
on what the number. Let's get to.
It is a cynical perspective.
It is, but it's just we are
good. People
we
have
face
jobs.
what we face. Sarah, what?
I mean, he's right. It's good. People have jobs. That's a good thing. It's just this weird macro nuanced understanding of those jobs creating more inflation, reducing rates, and equities ultimately depend on rates coming down to some extent.
Are we over here? Are we seeing the kind of economic activity that that would say, yes, you were right, Jay Powell, to cut, and yes, we need to cut more?
Well, I think first of all, when Jay first cut by 50 basis points in September, they might have been a little bit overly optimistic on the view that the employment markets were weakening, which obviously they're not. I think there's three factors that determine the path of the markets from here. That is, what does the Fed do? How much tighter do conditions get? And also market valuations. So starting with the Fed, we are already down from hoping for 4 rate cuts this year to 2. And I think today's number is going to take us well below 2 to 1.0, or maybe even talking about rate hikes. Tighter conditions are an issue for equity markets. These higher yields are a headwind for the markets, also stronger dollar. So that's also kind of a negative here, which is why the markets are down. And then let's talk about market valuations. We are currently trading at about 90% versus history in terms of a premium for the S&P 500. So what do we have to take us forward from here this year? We can't rely on valuation expansion. We're going to need to rely on earnings growth. And can we get that? We can probably get about 6 to 7% earnings growth on the S&P. That takes us for the bulls to about 6,400 on the S&P if everything works out just for earnings growth, which is basically, kind of what we have to rely on here, because valuations are going to have a tough time expanding for the S&P.
It's not like she's necessarily wrong on those arguments. It's just that we're going to need to see really good earnings growth for margin expansion or inflation coming down. I mean, like, objectively, that's correct. Like, we need inflation to come down for the market to get more excited about rate cuts and pricing that in to valuations, or we need valuation expansion based on margin growth on earnings, which means we need good earnings growth. Now, she's also right that the market is expensive, right? And we all know this, right? We're all waiting for a real dippy dip if we want to seriously deploy cash. So this could be one of those things where it's like, okay, as Kris and I were talking about on the last show a couple days ago, like, give us the real dip. If the market's that upset about the 10-year going up, they're that upset about inflation, they're that upset about rates, they're that upset about unemployment going lower, then give us the real dip. But so far, the market has refused to do that. It really hasn't. It has refused. Every time we get a little bit of a dip, I don't know if you want to call 1 or 2% even a dip, but every time we get that, people step in and they buy. And so until that trend changes, which I know we're only 10 days into the year, but that trend so far has not changed. And maybe that trend is the way it is because of Kris saying what Kris says right here in the chat, that the numbers are BS. Maybe market participants are like, no. We definitely think that we did not add 250,000 jobs. And when the real numbers come out, the Fed's going to see that the labor market actually is very weak, and we're going to get a ton of cuts immediately, which is not the best thing for the economy, right? If the Fed starts cutting like crazy, that means something that is breaking, but it is good for equities to an extent. There's obviously a nuance on how good it can be, how bad it can be. We've got to balance the lack of having a recession, but still, that could be a reason why buyers step in. But objectively, every time some piece of data has come out in 2025 that is somewhat bad or somewhat good for how the market's interpreted, and we get some red, Nubank right here at 1097, people step in, and they either step in a couple hours or they step in after a day. But we have not seen prolonged red over the past few days that leads to you actually feeling the pain. I mean, no one has really felt the pain in their portfolio, unless you've had quantum, in a significant way. And maybe this is what triggers it to begin. And we'll see at 9:30 how the market opens up and if it can maintain this momentum or not. But I think that's what we have to sort of factor in based on based on these numbers currently. TLT options are the one we need to look at. TLT goes up. Well, yeah, so TLT is definitely getting hit as well. Shout out to Adam as well. I had Adam at my house yesterday. We got some lunch. If you guys didn't see that video or that picture on Twitter, let me just share this real quick. I need to share this right here so you guys also know that I'm not lying about the bricks. Adam confirmed it. Adam likes TLT. He thinks TLT pops up very nicely when rates come down or when the 10-year comes down. It's just a question of waiting for when that 10-year comes down. As you can see, it's real. He's pointing at the bricks. I don't want to hear this whole nonsense about the bricks aren't real. I have 2 sources that have confirmed it officially. Arnie also confirmed it in May. If you guys don't believe them, then you just don't trust them. And these are my good friends, so I don't know why you wouldn't trust them. But anyway, TLT, right? There you go. He says they are real bricks right here. TLT is potentially the play. I mean, the TLT is down right now. Why? Because the 10-year is at 4.76, and eventually, if you think that 10-year comes back down to 4% or even 4.2%, TLT should go higher. But the question is the timing of this stuff, right? And I think 2025 is also going to be a question of where and how do you time these yields coming down or rates coming down enough to have your growth stocks or the names that are most affected by rising rates and lowering rates actually succeed in an environment where the Fed has no idea how to navigate this unemployment. Because I don't even know if the Fed believes any of these numbers or not. With a random piece of paper. No, it was for my notebook. Adam suggested it. He was like, hey, do you have a piece of paper and a pen? I want to write something down. I was like, all right, bro, you got it. You got it. It was his idea. Adam, tell them it was your idea. I swear this was not my idea. Adam was like, hey, do you have a piece of paper? I want to write something down. I was like, all right, that's your idea. People still don't believe it. I don't know why. Oh boy. Oh man. It feels like deja vu. It feels like 2024, where for the first 5 months, we were just arguing back and forth about inflation, jobs, unemployment. What does it mean? And then finally in September, we got enough data for the Fed to cut rates. I don't think the Fed was too ambitious with 50 bips in September. I think the Fed was, because if they had not done it, everyone already thought in July they should have done it. So it's like that one they needed to do. Maybe December we didn't need, even though technically the market needed it, because if we didn't get it, the market would have tanked on Christmas Eve, and then it really wouldn't have been fun. So at least J Powell let us have a good Christmas. But you could argue maybe that one wasn't needed. And that one, logically, it's like we really weren't seeing any progress on inflation outside of the labor market weakening. But now when you look at this labor market data, it's like, what weakening in the labor market was J Powell seeing to really justify cutting rates in September? We're in dip discovery right now. Yes, exactly. We're in dip discovery right now. Also, oil prices. This is not good, by the way. Thank you for mentioning this, Pergy. I totally forgot to mention this. This is bad, folks. We are up 4% on crude. Natural gas is up another 5.4% after being up 20% for the month. Brent's up 3.84%. Like, this is definitely not good for CPI. Definitely not good for company earnings, right? Because we know that oil prices are input costs. And as input costs go down across the board, every single company is affected by oil, no matter what. Even if you're a tech company, right? Oil still has a role. Also, but this also could be because of the wildfires in California. That could also be a reason why these are spiking. But the point is they're spiking. And that's not good for inflation. That's not good for inflation. Gold is up right now. Yeah, actually, all commodities are up right now, which is definitely, let me show you this chart, the market signaling that they're not buying that inflation is going down. They're not buying that inflation is coming down. Basically, gold is up right now. Silver's up right now. Pretty much all commodities, oil. Obviously, there's a lot of, okay, I'm missing the chart, but if we just look at gold and silver, we can look at SLV. That's a way to get exposure to silver if you want. This thing was in the gutter for the past 2 months. Look at that, up 1.39%, 27.78. And then gold is also up right here, up 1%. So the market getting into gold and silver right here based on this inflation data or based on this unemployment data is also them signaling that they don't think inflation is coming down yet. They don't think inflation is coming down yet. This is the actual data that we had this morning. Nat gas is almost 6%. Yeah, I mean, it is a tricky situation to deal with. So again, non-farm payrolls 256 versus 165 expected. Unemployment rate 4.1%. Average hourly earnings month over month was at 0.3. That was unchanged. Average hourly earnings year over year was at 3.9. That's slightly lower from 4%. Participation rate for the labor market, 62.5. We kind of needed that to go lower for the market to really think that unemployment is an issue, and it didn't. It stayed the same, which proves that people have jobs, and unemployment is not as concerning as one would argue. Government payrolls 33,000. Expectations were 15,000, so we added a ton of government jobs. Manufacturing payrolls, we actually lost 13 versus the market expecting 29,000. Non-farm private payrolls 223 versus 185. If Kris is right on his thesis that a lot of this is business services like consultants, and this one takes a massive hit as those jobs start to kind of disappear because they were never really there, then maybe we see a revision to the downside, which does show that we have labor market weakness. But as of now, when you add 223 versus 185, yeah, you're going to have the market thinking that unemployment still is not as big of an issue. We do have Delta and Walgreens earnings. Let's look at those real quick. So Walgreens is up 13.5%. They grew revenue 7.5%. That's nice, but Walgreens pump usually tends to come and go every time they get some good news, like the buyout news they got a couple months ago as well. So, I mean, look, if you owned Walgreens, that's great. I don't know if this is a reason to jump into Walgreens because the structural problems of that company are still pretty massive. And then you got Delta right here up 7%, which is nice. It looks like, I haven't looked at the numbers exactly, but it does seem like people are probably traveling more, which is a good thing. But it doesn't really affect the unemployment data. Yeah, Delta beat 185 on EPS and 14.4 versus 14.2 billion on revenues. That's good. I mean, look, again, good earnings. We're starting off the year for earnings cycle with Jefferies. They had a great earnings on Wednesday. So Jefferies, strong numbers in terms of financials. Walgreens, even strong numbers, even though Walgreens has some structural issues. And then Delta, really good numbers for Q4. So, and that's why the stock's up. And so the question is going to be, I guess, going into earnings cycle, can Netflix and Tesla and all these companies put up really good numbers, even with a crappy macro picture with the high 10-year and a high dollar? And is the market going to buy up stocks that show really good earnings in the face of this type of data? And I guess we're going to find out over the next few weeks. Fubo is also up 7% right now. Disney's canceling Venue. Okay, so that got Fubo up another 8% after being up 300% this week. Or 7.2%, yeah. See, but look, this is what I'm saying in the beginning. Look at Bitcoin coming back. I mean, look at Tesla coming back. Look at SoFi coming back. Like, I started the show saying, all right, the data sucks, but I don't believe that it's going to be something that means you fade the market. Because this market is resilient and you've got dip buyers coming in. And I know we're in the pre-market, but it's just like at 9:30, we're going to see how bad the market is interpreting this jobs data. Because already Bitcoin kind of looks like it bottomed a little bit at 92.7 and it's coming back. Same thing with Tesla, SoFi, Hood, AMD, NVIDIA. It's really going to be a question if people decide to sell off their NVIDIA stock because of the 10-year. Because what? They're going to buy the 10-year? Who the hell is selling NVIDIA to buy the 10-year? I just want to have a conversation with them. I just want to know who's actually doing that. And if they're not doing that, then maybe this is really not going to be as violent of a downturn as people think, just based on this data. There could be other things, but maybe not this. Dan Niles right here says the labor report was much better than expected when CPI has been between 2.5 and 3% at year end. S&P trailing multiple has been at 19x and 10-year at 5.8% versus 25x and 4.7% today. In previewing 2025, I saw near 50% chance of no Fed cuts or raise. The odds moved up today. Let's get a sentiment indicator from you guys on this question, which I'm very curious to see what you guys think. Which is a very simple question. Will the Fed hike this year? Let's see how many people think we're going back to a hike. So get a little bit more coverage on rates, and then we're going to go to Tesla because we got a lot of news from Tesla coming out last night.
Ben?
Yeah, so I think that the big number here is not the payroll number, which is coming in much hotter than a lot of analysts expected. But the big number here is the U3 and the U6. So seeing increased tightness in the labor market. This isn't just in isolation. We're on the cusp of a new administration. We're on the cusp of a new administration, which has pledged a very different immigration policy than one we've seen for the past 4 years. So I think this makes the Fed's job harder. The Fed will have to, again, start worrying about wage price spirals and labor-driven inflation, particularly if we see out-migration in terms of immigration and a shrinking labor force. So, that's a real concern. I agree with Steve. Like in the absence of that, this is probably good news. This is more jobs for Americans, rising wages, but there is a real concern about the labor market becoming too tight.
All right, Allison, from where you're sitting, What do you think?
I mean, I'm with Steve. This is, a good report. I mean, it might not be what the market wants, but, it means people have jobs. I'm starting to just think this is a healthy labor market, and we might have to come to terms with the fact that anyway, inflation isn't as low as the Fed would like. This might just be where inflation is and where our new equilibrium rate of inflation, which is bad news for the Fed, because I think they were very anxious to cut so they could tell the story that, oh, we've got inflation back down to target. We're
They
still
already
fully
cut.
they want to keep cutting.
I know,
So
but they can make mistakes, Allison.
Yeah, I think that's right.
Go ahead, Allison.
Yeah.
Sorry.
Well, I think they were trying to tell the story. We beat inflation. We're credible. And now it looks like that last half mile isn't going anywhere. And I think there's a lot of inflationary pressure in the pike next year. Even if the Trump administration is successful, it'll boost growth and potentially inflation too. And that the Fed might be in a bad position of saying, we've never made our target. We were below target, then we were above target. But since we've had a target, when has inflation ever been two?
Maybe, as Austin says in the chat, 3% is the new 2%. Maybe. Now, the Fed doesn't want to hear that. J. Powell doesn't want to hear that. Goolsbee doesn't want to hear that because they've been going around for the past year and a half saying that we are sticking to our 2% target. I don't know, dude. Maybe in an advanced economy like the United States, we need to up our expectations on inflation because we simply, especially given we printed $10 trillion over the past couple of years, we can't get all that money out of the system and expect to get to 2% inflation. Do you guys know we had basically 0% inflation from like 2008 to 2019 or 2018? So about 10 years. Obviously, the economy did crash in 2008, right? And that kept rates low for a very long time. But we also had inflation that was low for a very long time. Trump in 2017, when he inherited Obama's economy, rates were low until 2018. And then Jay Powell finally started seeing inflation come back and he started, increasing interest rates. And then COVID happened and, now we're in this situation. But I don't know, dude. I don't know how easy it's going to be for the Fed to just be like, yeah, we're going to keep with our 2% mandate. Take a look at this. We haven't looked at Trueflation for a long time. Trueflation saying we're at 2.96% in America. If Trueflation is accurate, which Trueflation has been very, very accurate. We even had the Trueflation founder on the show a couple months ago. And they talked about their methodology for how they get to this data. That means CPI is going to be bad, folks. That means CPI is going to be, right now we're at, I think, 2.8% on CPI. That means we're going to 2.9 or 3%, one of those. And if we don't, that means that the CPI is not as accurate compared to Trueflation if you trust them over the BLS. Which means, yeah, we're going to get a higher CPI if you do think that Trueflation is correct in terms of how they aggregate data. And the data we've seen this year already says that inflation probably is a little bit higher. Again, shelter's coming down, but it's just not enough to really make a dent in January. Spending was up in Q4 with the holidays. That definitely has a little bit more of an inflationary effect. And then we've got these California fires, dude. My heart really goes out to anyone in California. I mean, this is just, it's sad. It's unbelievably sad. I mean, there are people that I know, not really know, but like creators that I've followed for years, like content creators. And, I'm seeing their Instagram stories where they're like, my house burned down. And it's just like, and these are not like the biggest celebrities in the world, right? But these are still people that I followed. And I'm just like, wow, like I never thought your house would just be gone. And so it's one of those things where, first of all, insurance companies, I think, are going to take not the biggest W in Q1, because that's also going to be affecting them. They're going to have to be paying out a lot of money. IAK, which is the insurance ETF from BlackRock, that one's down 1% of the pre-markets. They're going to be having to put out some heavy premiums on the $150 billion of recovery that is estimated to be needed, probably even more than $150 billion. That's just the estimates right now. These were houses that were 30, 40, 50 million bucks just gone overnight. Like, do you rebuild those houses? Do you pay back? Like, how do you resolve that? And then you got unemployment that is technically going down along with all these inflationary pressures. So it puts the Fed in the situation where either they're going to raise the inflation mandate to 3% instead of 2%, which would be a massive pivot. And that would probably decrease a lot of the legitimacy in the Fed, even though I think all of us would be like, yeah, we get it. Like, we get that you just can't get it lower because it is what it is. Or they're going to be stubborn, and who knows, maybe they raise rates. You guys said 73% on no, will the Fed hike? I would have voted no as well. I don't think we're at that point. I think it has to be very aggressive in terms of inflation for us to raise rates. But it depends on how much of a hawk Jay Powell wants to be on these numbers. Bobby says, I think the fire losses in Los Angeles are going to be closer to 1 trillion. Those are some of the wealthy people there, and they're going to be selling securities for various reasons. Well, yeah, I didn't even think about that. It's a good point. If you're super high net worth and you just lost a $30 million house and you have, I don't know, 30 million invested in equities, you probably sell some equities to deal with it, right? To like cover a little bit of the pain. That could be an argument as well. So yeah, I mean, that definitely could create pressure on the broader markets. Kris says the Philly Fed already called this BS out last month. So Kris does not believe that this job data is real, which means then truly this fade on the market based on the job data would not be as accurate if the job data is fake. I guess when Trump comes into office, we're going to find out how fake or how real it is. So far, we already see stocks recovering. SoFi was down 3%. Now it's down 1.9%. Tesla was down 2%. Now it's down 0.5%. Robinhood was down 2.3%. Now it's at 1.86, back above 40. It's like, the problem with the way the market is interpreting this data is that the data is not bad enough, like not just so god awful enough to say sell your hood when they're about to do $1 billion in revenue in Q4, or sell your Tesla when they just produced the most amount of energy ever in Q4. Like, these are real statistics on companies and their growth in verticals that they are just like expanding. And you're saying, yeah, that like SoFi getting 10 million members. Oh, that doesn't matter because unemployment went up or unemployment went down. It's like, I don't know who logically decides to sell it off outside of algorithms, which might be the little bit of the sell-off that we've seen so far in the pre-markets. Oh boy. Well, we'll see how this works out. Let's move on to Tesla. We'll get back to some of the macro stuff in a bit. We have 12 minutes till the market opens, and we'll see how the market ultimately deals with this macro data. It is a Friday as well. You got options expiring today. We'll see if we have a little bit of a bloodbath, if the market kind of doesn't care. Also, real quick on macro before we get into Tesla, money market funds, for those that missed it yesterday, $66 billion were added to money market funds, 6.92 trillion on the sidelines. Last week, we added 54 billion. The week after that, we added 46 billion, which means we've added, or 42 billion. We've added about $162 billion in the past 3 weeks to money market funds. So you do have money that's coming off the sidelines, at least to an extent, or money that's going onto the sidelines, probably from crypto and equities, and just chilling out with their 4%, which at least for the next couple months, it looks like that 4% yield is not necessarily going down yet. All right, Tesla. So big news on Tesla. We got the new Model Y, folks. We got the new Model Y. It is officially out. Tesla has released the Juniper version of the Model. I don't know if they're still calling it that, but it is the brand new Model Y. It is officially out. It's the Model Y refresh. Right now, only available in China. In the United States, I believe it's coming in the summer. Pre-orders already started, but I think summer is when it comes out. That is the old one on the top, and this is the new one on the bottom. Ruda, thank you for the super chat. We are red since your bell sucks. I am getting much closer to a solution on the bell. I believe on Monday I have hooked up a soundboard, and I do think that we will have a solution to it. Hopefully. Don't hold me to it, but I think Monday we'll have a solution. But yeah, so this is the new one versus the old one. Look, here's the thing. My first take to this was that this is great. It looks nice. It doesn't look that different to me, but there obviously are upgrades and different things that Tesla's introduced. The range is up about 3%. The number of people are saying it's added 440 miles. That's incorrect. That's in China, and they measure miles in a different way. In the United States, it's more 350 miles. Now, we still need a lot of testing for us to see how much the range is there, but my Model Y gets 327. This one gets 347. So a little bit of a 3% increase, which is nice, but it's not like, it's not like some massive increase to 400 or 500 miles. Having said that, I have zero regrets of getting my Tesla and my 0% APY for my old Model Y, or 0% APR for my old Model Y, and a bit because of this model. So I there was a lot of people when I was buying my Model Y just on Twitter that were saying, wait for the new one, wait for the new one, wait for the new one. I genuinely, and you can believe me or not, but like I have zero regrets of not waiting. Because I got 0% APR and Tesla's not doing that anymore. And I hope they bring that back as a promotion, but they don't do it that often. I mean, this was the first time they really gave it with no strings attached. So I don't know how easy it is for them to bring that back. Number two, I mean, there's nothing that crazy about it that's like, oh my God, you got to upgrade. There's some good things, and it's really good, and I think it'll drive more volumes, which is awesome. But it's not like it's not like, from what I understand, it's not like a Model 3 refresh. The Model 3 refresh was different. and this is not me saying it. This is just me looking at the comments yesterday of Under Sawyer, who's a big Tesla account, and seeing all the people talk about it. There's a decent amount of people saying, yeah, the Model 3 refresh was way more like, it hits you different versus the Model Y refresh. But it's a good refresh. It's not a bad refresh. There's the tires, as you can see, old versus new. Definitely looks better. Not saying it doesn't look better. It's just not something causing a lot of regret, which is great for me. It's not the best in terms of, is the Model Y that much more enticing? But I think if you were on the fence of buying a Tesla, this Model Y is not the thing that's like, all right, this is the one I'm going to buy. Like if you're on the fence, this Model Y maybe gets you off the fence, but if you were going to buy a Tesla, you're going to buy a Tesla. If you weren't, you weren't, right? I don't know if this is necessarily going to change that many people's opinions. Tesla said the new Model Y provides effortless control with a precision-engineered indicator stock, thoughtfully refined based on valuable customer feedback. We've introduced customizable steering wheel switches, allowing quick and intuitive operation on the most frequently used vehicles to better meet drivers' needs. Is anyone buying a Model Y based on this new refresh? Let me know if anyone is. Brandon says, same. I got one a week ago after you, and I'm happy with the 0% APR. I've also rented it on Turo and doubled my payment each month. Oh, that's amazing. That's awesome. So, yeah, there you go. It's like the 0% APR to me is way more attractive than like the redesign. And it looks good. So some people are actually saying it looks ugly. I don't think that. I don't think it looks so amazing where like I feel regret, but it doesn't look ugly to me. The duck lips on the original Model Y with the line going through the lights, you see a little bit of a change of the front. The back looks very nice as well. They have this new kind of light thing on top of Tesla. So it looks like a pretty decent car. It's just not one of those things where I think people are crying if they got a 0% APR on a Model Y. But overall, that's out. So that's good. Obviously, that's important because that means that, we should get more deliveries. Also, another reason that I think Tesla missed on deliveries is that people were waiting for this Model Y refresh, right? That could be an argument. And people are waiting for that new $30,000 car. So if people are waiting on those two things, maybe even though the EV incentive is going to go away probably in the next 3 months, as per Trump, maybe that's okay because maybe that means that Q4 or Q1 is still going to have increased momentum with demand because of these new models that are coming out. So we're gonna have to wait and see. Tesla was up overnight based on this. Tesla's down because of the jobs data, but I don't think it's bearish at all. It's just not something I think you're crying about if you just got a new Model Y. It looks like a tall Prius. I mean, look, I never thought of how the Model Y looks when I bought it. Like when I bought it, I wasn't looking for a sexy car. I was just I needed something a little bit higher because the Model 3 is a little bit too low for me, and I wanted something a little bit bigger. But I never really factored in, is it sexy or not? I just really wanted a nice EV that could drive itself. That's it. That's why, caring about the design and stuff. I don't know. Maybe I'm not a car guy, so I don't care too much about design. But design was never a reason for me to wait for the refresh. Because I was like, what matters is how much I'm paying a month, not if it looks slightly more attractive. Nonetheless, that is the Tesla news that we got, and it looks like it should overall be okay. TMDX is dumping. TMDX, oh boy, that's down 12%. I don't know if there's any news on that. If there's any news, let me know in the chat. It was down 7% on Wednesday. It looks like that's news-based versus unemployment-based. I don't know if unemployment can take this one down 12.5%. Okay, one more thing on Tesla. Elon did an interview last night, and he said a lot of different things. One of those things was that Optimus is coming out pretty soon. We've been talking about the idea of Optimus and humanoid robotics for a while, and I think we are closer to it than not. Elon seems to think we are as well. So here's a clip of Elon actually discussing the potential for Optimus and the output that he wants on Optimus, which he thinks is going to be closer to 500,000 robots in the next 2 years.
So that's the other element is our humanoid robots. So I think probably most people, if not everyone, would like to have their own personal C-3PO R2-D2. And I actually think humanoid robots will be the biggest product ever in history by far.
I agree.
Yeah, it's just wild because you can just say, well, every human is going to want one most likely, and some will want two, and then there'll be all of industry in terms of providing products and services. So that you have to say, what's the ratio of humanoid robots to humans? My guess is it's at least 3 to 1, 4 to 1, maybe 5 to 1. So we're talking about 20, 30 billion humanoid robots, and it's not even clear what money means at that point, or if there's any meaningful cap on the economy. I think at that point, assuming that things haven't gone awry, in the good AI scenario, I think we won't have universal basic income, we'll have universal high income.
So do you think 5 years for my first robot, or?
For Tesla, our Optimus robot really is, unless somebody's got something secret we don't know about, our Optimus robot is the most sophisticated humanoid robot in the world. It's got a hand that has 22 degrees of freedom. It looks and feels like a human hand. And we're aiming to have several thousand of those built this year. Initially, we'll test them out at Tesla factories, but then assuming things go well, we'll 10x that output next year. So we'll aim to do maybe 50 to 100,000 humanoid robots next year, and then 10x it again the following year. It's like 500,000 robots in 3 years. That's a lot.
That is.
Elon's bullish. Elon's bullish on the robots. Take a look at this video from China right here. You've got a robot walking with real people. It's coming, folks. Robots are coming. They are coming. That's a real video. This is not AI. This is not fake. This is from China from a couple days ago. You got a real robot walking around. So if Elon's right, now again, the grain of salt we have to take his comments with is that he is always very, very ambitious on his timelines and projections. And he gets there eventually, but it doesn't happen as soon as he thinks. He thinks 500,000 robots by 2027. I don't know if we're that close to that many robots. I think there's a shot if he starts showing some like contracts where companies want to buy a ton of Optimus. One of the reasons I think we're not going to get there that quick is because we have to manufacture them, and it takes time to manufacture. Now, Tesla's the best vertically integrated to begin manufacturing at scale, and he says they're already building thousands of them. But we're going to need a lot of manufacturing to get those robots into production to the tune of 500,000. So we got to see how the industry compounds. But my belief is the same with Jensen. The ChatGPT moment is around the corner, which I think means this year, even if that doesn't mean mass production. And that's something I think the street has not factored into these shares yet. And when they do, Tesla probably gets a tailwind from that. But we're going to have to see in 2025 how these companies make announcements on robots actually becoming a real thing. There we go. All right. So that's the update on Tesla. We have 30 seconds until this stock market opens. Today, I think we're looking at pretty much all stocks to see how much of an impact is this unemployment data going to have on them. For those that are just joining, thank you for being here. Unemployment came in at 4.1% versus 4.3%. Jobs data came in at 256,000 versus 165,000, which means we have way more jobs than the market expected. Unemployment went way lower than the market expected. And as a result, the market is assuming inflation will be here for longer. And that means that rate cuts will take longer to get. They have now priced out rate cuts until October, and they've only priced in one rate cut. So we're going to need to see if that data actually has a meaningful impact on how the market interprets it. All right, 9:30 Friday, January 10th. Thank you, everybody, for being here. The stock market is now open. All right, here we go. Let's see how equities are performing on a Friday, January 10th. Bitcoin, 94,231. TLT is down 1%. SoFi down 2.7%, 14.15. SoFi is down 2.74%. Robinhood down 2% as well. Now it's back above 40, just hovering right under 40, down 1.98%. AMD, they got downgraded today. That's why they are down. They also got downgraded on Wednesday. So it looks like the banks are kind of teaming up on AMD right here, but they are downgrading this thing aggressively. 117.9 right now. The bottom was 115 on Christmas Eve, so we'll see if it gets back there. But that one's down 3.3%. NVIDIA, wow. NVIDIA was 153 on Tuesday. NVIDIA is 136 on Friday, down 2.3% on the day. IBM is down 0.5%. Palantir down 2.3%. Grindr 1718, that's down about 1%. Costco, really good December numbers. That's up. Their sales are up 7% year over year. Costco is slightly up about 1%. As we get into the market open, IWM down 1.8%. Makes sense. Small caps are probably taking a hit if we're not getting a rate cut anytime soon. The S&P 500 down about 1%, 584. Square, which is now changing its ticker symbol to XYZ, is down 3.79%. It's getting hit a little bit more, maybe because that ticker symbol is not what the market likes. Grab, oh boy, Grab's down 4%. We have a dippy dip on Grab. And the reason for that is not anything fundamental based on Grab. It's more so about the dollar, which spiked up 1% this morning because yield spiked because inflation expectations continue to be high. And Grab is up. Grab's market cap now is 17 billion, so about 35% of the company is trading in cash. Robinhood 4014, that's down by 1.68%, making a little bit of recovery. The Qs are down 1%, Roku's down 3%, Apple's down 1.64%, Microsoft's down 0.5%, Upstart's down 4%, Enphase down 3%. Micron's up a little bit. Surprisingly, Micron somehow is green in the face of all this red. Uber's green, which makes a little bit of sense because Uber got sold off badly last year, and Uber is, I would still say, really oversold from where it was. It was at almost $85 in 2024. Now it's 64, down just a little bit. Snapchat's down a little bit. Ulta's down 1%. Disney's down 0.5%. Google's up a little bit. Google's up 0.4%. Disney's actually up 0.4%. Let's look at the Mag 7. All of them are red except Meta, which TikTok has said yesterday they are not going to be banned. TikTok said they are not going to sell themselves if the Supreme Court doesn't extend their process of being in the United States, which is why Meta is probably up right now. So basically by January 19th, TikTok has said yesterday, they're just going to shut themselves down. They're not going to sell themselves if the Supreme Court doesn't extend their ability to stay in the United States, which is super bullish Meta. Tesla went green as well. Wow. Tesla going green, probably on the market liking the new Model Y refresh is driving deliveries. Nvidia's down, Amazon's down, Google's down, Meta's up. So the market's thinking Meta's going to get more of a tailwind from TikTok being banned than Google, which I think is true. I think it's going to help YouTube, but it's going to really help Instagram. Apple's down. Wow, Apple below 240. Apple actually getting hit, down at 238. And then Microsoft right here, flat. Well, not flat, down 0.7, but not as down as much as Apple. Rocket Lab's green. Rocket Lab did get a new contract with Neutron, so that makes sense. It would be up probably even more if unemployment data was better. Rocket Lab right here, 27.51. Walgreens up 19%. Again, good earnings. Just a question of if you trust Walgreens to turn around the problems that they're having. Gold is up 1%. Silver's up 2%. That means the market's getting a little scared. Robinhood is recovering 40.50. It's been very resilient throughout a lot of the volatility this week. Robinhood basically just like not letting anything really take it down. MicroStrategy's up. That's green. That's good. And that's because Bitcoin's going up a little bit, 94,350. Constellation is up 20%. Constellation is buying a company. That's why I think I might have that wrong. I could have that wrong, but I think I saw a headline that they're buying another company, which is really bullish for them in the energy space. Someone can correct me on that, but that's why I think they are up. Oh, Quantum. Let's check on our Quantum friends. Where are Quantum today? Wow. Quantum's no recovery. Quantum Computing down 3%. Rigetti 14% down after being down 40% on Wednesday. IONQ down 5%. D-Wave down another 4%. That means it's officially down more than 50% since Jensen's comments on Wednesday. Quantum not really getting a bid yet. They got a little bit of a bid on Wednesday after hours, if you guys noticed. They actually rebounded. They were up 7 to 8% after hours, even though they were down 40% for the day. So there were people stepping in. But as per this jobs data, which makes sense, if the jobs data is bad and we're gonna have more inflation and we're gonna have more higher rates, or we're gonna have rates higher for longer, or at least high for longer, then Quantum, that's more speculative, is probably not gonna easily get a bid compared to some of the other names. All the spec names are down in our portfolio: Quantum, Oklo, Kohler, GameStop, AMC, except MSTR, which just turned red. So all the spec names are officially down. Archer's down 8%, Big Bear is down 1%, SoundHound down 7.3% here right now. Why is Nintendo up 4%? There's a headline on Nintendo that I'm forgetting about, but I saw it yesterday, and I think that's what's helping Nintendo. But I did forget the headline. If someone knows, you can put it in the chat. But I think there's some new game collaboration, something that's helping Nintendo. TMDX is down 11.2%. I feel like there has to be specific news on that one. There has to be. I don't think you fall 11% on the jobs data. That's easily. Small caps are down. Fubo's green. Delta's green. Delta's up 8%. We got to find out Delta's Q1 guidance. I got to find that, because if they gave a really good Q1 guide, that's the first sign of companies increasing earnings expectations, which is actually very bullish, especially from an airline that's the consumer. It's also inflationary, but still. Oh, there was a short report. It's not by Hindenburg though, right? What's the firm that put it out? Scorpion Capital. Oh, this is funny though. Oh, this is really funny. This is super funny. Scorpion Capital has a short report on TMDX. with a $0 price target, dude. That is so funny. Why is that so funny? Price target 0. Companies shitty. Don't buy it. 0. Talk about a short report, bro. Like, we think this thing is literally going to 0. I'll read through it, but the headline is "Walk Like an Egyptian, a mafia-style extortion, racketeering and organ trafficking scheme masquerading as a medical device company. Billing fraud, unreported device failures, blah, 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 blah. They rapidly will unfold into a death spiral." It's a hell of a short report. If they're wrong, though, that's a great dip opportunity. If they're wrong. If they're right, then maybe it's not the best. Talk about a sting. I like that. That's a good one. I like that. I see what you did there. Tesla, are we green on Tessie? We are green on Tessie. $3.95. We are still green on Tessie. Palantir, how bad is Palantir getting hit? It's not horrible. Down 2.9%. I mean, look, it sucks. Palantir's down 12% to start the year. I think all of us knew that eventually a pullback was coming, given the stock got very extended. The fact that we're holding 60 to me is very impressive. Even holding 65, to be honest. So Palantir is just in that stage where it needs earnings growth, and we're not going to have that earnings for another 2 months, or at least a month and a half. And then we'll have to see what happens with Palantir. And we didn't get any press releases yet. No press releases for the new year. So I guess we're going to wait for them to come out with any new deals. Grab is down 4.8%. Rocket Lab down 1.5%. Rocket Lab just goes red after going green, 26.98 after being at 27.40. SoFi, oh boy, SoFi is getting hit. SoFi is getting hit. SoFi is indeed getting hit right now. Even Hood's getting hit. All right, everything's getting hit. Now everything's getting hit. Hood's at 39.32. AMD 115. AMD just went below the Christmas Eve low. Nvidia 135. Grinder below 17. Anova, is this the dippy dip, folks? It's looking as close to the dippy dip as we've seen in a while. Even though is 1% down on the S&P really the dippy dip? We're red, though. We're going real red. I think Algo's just stepped in. At 9.37, I think Algo's just stepped in. And once we see a green candle on any of these stocks, we might see a reversal for the day. But there's no green candles yet. There's just more red. As soon as we see a green candle, we might get a little bit of a reversal. But right now, I think Algos are stepping in, and they are selling off a lot. MicroStrategy as well, 325. They are currently down. Can we talk Rumble? Where's Rumble? Is that one getting hit? Rumble down 4%. Look, Rumble, you got to believe in the thesis that they're going to actually build out a competitor to like YouTube when it comes to content. And they have a lot of users. It's just they're not growing. If you actually look at their financials, they do not grow. They grow like 1 or 2% year over year. It's like not the best growth. They did get a $750 million investment by Tether the other day. I don't know why Tether invested in them. I don't know what crypto related investment that looks like. But the financials make me not want to touch it. And I just don't see the product vision for a company like Rumble. Nonetheless, there's a big cult around it. So there's a world in which it can go up just on any headline. Bitcoin just falls below 94,000. TLT at 85. Where's the 10-year? The 10-year, the dollar's at 109.5. So dollars up. The 10-year, oil's up 4%. The 10-year is 4.74. A little bit down from the pre-markets, but still is green above 4.7%. It's red. Oh, Michelle Bowman as well. We didn't even talk about Michelle. Michelle really didn't help us yesterday. She is one of the Fed presidents. She was one of the only Fed presidents that voted against the September 50 basis point cut. And look at what she said yesterday. I mean, it's not bullish. She said the December interest rate cut should be the last. Talk about a hawk, bro. We should refrain from prejudging the incoming administration's future policies. The current stance of policy may not be as restrictive as others may see it. Inflation is elevated and I see upside risks. Progress has stalled. I prefer a cautious and gradual approach to adjusting policy. Pent-up demand following the election could pose inflationary risks. She's talking about companies that want to stock up on resources because they think tariffs are going to increase prices. And so that's why a lot of companies are buying up a lot of goods and services right now. So look, it is hawkish. Now, granted, who knows? Maybe she ends up being right because it is right to be hawkish. I mean, I guess we're going to see over the next couple of months, but definitely these remarks yesterday didn't help the futures. And then with unemployment data coming the way it came, that also didn't help the volatility we're dealing with right now. All right. Do we have any green candles? No, not really. Well, a little bit. No, we do have a little bit. Robinhood 39.17 was the bottom so far. At what time? 9:40. It's 9:41. AMD still going red, so that one's not showing any green yet. 115.75. Wow, down 5%. That is officially below the Christmas Eve bottom. Nvidia 135. That's down 3.4%. Costco maintaining its green. TNA, leveraged IWM, small caps, that's down. S&P 500 584. That's down 0.9%. She was the dissenter in October, correct? She supported the cut in December, but she dissented the cut in October. And it doesn't look like she's going to want the cut in January, but the whole market at this point knows that January we're probably not getting a cut. Let's read the AMD downgrade this morning, because that also was not the best for AMD. So, Citi downgraded HIMS to 25. They raised the price target, but they downgraded it to a sell from neutral. I love when they upgrade the price, but they tell you to still sell it. Constellation Energy is acquiring Calpine for $16.4 billion. So that is the energy news that we were looking for. This is why Constellation is up 20%. Again, honestly, energy infrastructure seems to be the theme of 2025 so far. That's what we're looking at. Energy infra. Those names have done the best so far this year. Okay, so Goldman Sachs, they downgrade from 175 to 129. Here's what they say. Although we remain constructive on the company's ability to take share from Intel and x86-based compute across PCs and traditional servers, we are increasingly concerned that the rise of ARM-based custom CPUs, coupled with the competitive intensity in accelerated computing, aka NVIDIA, will A, weigh on AMD's revenue growth relative to peers, B, exert upward pressure on AMD's OpEx profile, and C, in turn, weigh on the stock's multiple. Since being added to the buy list in 2020, the stock is up 50% versus the S&P at 72%. So AMD has outperformed the S&P over the past 4 years. We believe the underperformance was driven by the weakness in PC and traditional end demand, as well as more recently slower than expected growth in data center GPUs. We now believe the stock will remain range bound on a relative basis until the market regains confidence in AMD's future growth and margin trajectory. Look, if you're bullish AMD, you gotta be excited to then buy that dip, because essentially if you're bullish AMD, you think Goldman Sachs has no clue what their growth is going to look like. Even though you think their growth is not as good as NVIDIA, if you're bullish AMD, you have to believe that the street is underestimating the growth, and that's the reason you buy. Because if they're underestimating the growth, the multiple should expand. If they're right about the growth, then yeah, maybe the multiple doesn't as easily expand. Tesla right here, 395. Tesla's green. Grab recovering a little bit. It was at 437. Now it's at 446. Rocket Lab, you got a green candle right there as well. Back to 27 from 2684. So maybe we put in some lows for the day potentially. Robinhood back to 39.75. SoFi right back above 14. So it was at 13.87. Then you see this V shape back to 14.07. So maybe 13.87 was the bottom potentially. SMCI is almost green. Let's look at the semis. Where are the semis? Semis are all red except ASML, which has been very resilient over the past 2 weeks. SMCI, which just turned green. Intel's down 2%. ON is down 4%, or 3.4%. AMD's down 4.8%. NVIDIA's down 3%. ARM's down 4%. Marvell's down 2.48%. TSM's down 1%. Dell's down 3%. Micron is down 2.1%. So all the semis are getting hit. Nike was upgraded at Piper. Is Nike green? 72.17. Nike's up 1.2%. Nike's up 1.2%. Is Quantum back up? Are we getting a little recovery in Quantum? A little bit. IONQ up 4. D-Wave up 3. Yeah, QUBT up 10. And then Rigetti still down 1.9. But we do have a bit of a recovery. Rigetti was at 843. Now it's at 983, even if it's still down. So it looks like the dip buyers have come in for some of the Quantum names, along with the rest of the market as well. What are you guys thinking? Who's buying the dip? Who's buying the dip? Is this dip worth it? Who's getting anything on this dip? I don't know if it's a dippy dip. It's a little bit of a dip. It's not, I don't know, dude. Like Robinhood's dip to me is like 35, not 39.75. This is what I'm saying, right? And we might never get 35, which is okay. I'm fine with that. But 39.85 is not the dip from $40. Like that's just like that in no world, that 15 cents can't be the reason you get super excited. You got to see some real action. Grab an NVIDIA. I mean, Grab is definitely, but grab. See, the grab is more the dollar. Let me see. Grab's at 448. What price would these fill at? If I buy another 25 of these options, do we fill? All right, I'm gonna put an aggressive order for grab, and I'll see if they fill. I'll put a very aggressive order. All right, I submitted an order. Let's see if it fills. I'm probably putting an order that prices grab more at 435 versus 445, but we'll see. We'll see if that fills. And again, the grab dip isn't real to me. This is not real. Like grabs, there's nothing changed in grab. It's the dollar, and I guess we got to wait till Trump comes in to get this dollar to come down. But that does create an opportunity. Based on who wants to deal with it, it creates an opportunity. Amazon's 218. You know, I did say I want Amazon this year. It's just, is Amazon at 218 the right price for Amazon? I did say I want more Amazon this year. I did say that. VIX, where's VIX? VIX is up 5%. The VIX is up 5%. VIX is up 5%. Is Nubank getting hit off this as well? Nubank, no, recovery to 11, even though it's down 1%. Palantir's still getting hit, 65.75. That's down 3.5. Tesla also officially, like, actually going red, 390 right there. Let's see how well Tesla can hold the 390s, or if it gets into the 380s. Delta holding on. Wow, 11% on Delta, dude. That's amazing. If you're in it, congrats. Amit, is this a dip for leap calls or DCA shares? This is absolutely not a dip for leaps. Not at all. I mean, again, leaps stocks need to be incredibly undervalued for the asymmetry to be there for long dated call options. So I would say if this is any dip, it's a dip for shares. If it's even that, we got to see how bad it gets, or if it stays, if we continue to see some downward pressure, but I wouldn't say it's for leaps. Unless the stock, again, really is in the gutter. It's got to be really, really, really in the gutter. Cactus Jack, thank you for the $5 super chat. Appreciate it. Oracle of Oahu, thank you for the $5. Amit, got my cousin Snoop Doug from Cali on your channel today after I was bragging about you. He loves the content so far. He bought Delta calls. You have a cousin named Snoop Doug. That is a hell of a name for a cousin. And he lives in California. That's awesome. Reminds me of Snoop Dogg for some reason. That's great. Thank you for being part of the channel. Thank you for recommending it to him as well. Bitcoin 93, SoFi not really holding on to its strength. I mean, it's above 14, but it's not really showing signs that it wants to keep going above. Wow, Nvidia 134. 134 on Nvidia. TLT leaps, yeah, aren't crazy. I don't think TLT leaps are crazy, but TLT is actually beat up. So that one I don't think is insane. But again, it's got to really be beat up to see if there's any momentum here. SoFi leaps. I mean, I think SoFi has to go back to 13 to get excited for leaps on SoFi. I don't think 14 is leaps territory yet. Unless you're just really bullish that SoFi goes much higher in the next 2 years, which I am, but it's about the price, the premium you pay for these leaps, right? SPY's at 582. $2 away from 570. Look, in my opinion, and I think you guys feel the same, if you're going to give us a dip, give us the freaking dip, bro. If you're going to give us a collapse, give us the collapse. A lot of us have cash. We will go shopping, but give us a deal. Don't just be like stagflation where you're just like not really going up, not really going down. Rivian's down 1.4. Uber's actually up. Toyota's down 4%. Hood's at 39.78. Nubank, Palantir back above 66. Tesla holding 390. Yeah, we're not that red. We're just not that red. For those that are wondering why we're seeing this red, again, if you're just joining, unemployment data was just not the best in the context of the Fed. They wanted lower jobs. We added more jobs. That means more inflation, and that means less rate cuts. And so the market's pricing that in, and they are selling off equities. To the 10-year still at 4.7. That's also not helping, and that's going up right now. That's not going down, 4.737. And then the dollar continues to stay high as well. Target's up 3%. Wow, that's weird. Target and Walmart are up today. That's weird. Maybe that's up because prices are not going down if inflation's not going down. So Target's margins and Walmart's margins should be higher. because they don't have any incentive to really reduce prices if inflation's not going down dramatically, and that's good for volumes and sales for them. So maybe that's the reason. Maybe unemployment going down is good for them as well. That means more people have income. They can spend at a place like Target and Walmart. That's interesting. But yeah, the market's given those two a bid, along with Costco. All the retailers actually. Is Home Depot? Let's see Home Depot. That would confirm the retailers are up. Home Depot's green. What about Lowe's? Lowe's is basically green. I mean, it's down 0.09%. I would say that's flat. So the retailer's catching a bid on this. Target could be up because less layoffs, so more people spending. Yeah, exactly. Oh, holidays. Yeah, holiday sales were through the roof, but I feel like that's got to be priced in at some point. That sector is one of the only sectors today that's actually like green based on this jobs data. Are you selling Palantir? No. If we get Palantir down well enough, I will buy more. But dude, Palantir, I don't stress over Palantir at all, dude. Like, it's just like, if it goes down, I buy more. If not, I'm happy where it's just, I guess this is the point where I am, right? I said this yesterday, but someone DM me is like, dude, I have 900 shares of Palantir. I bought it at $20. I'm getting a little scared. What's your advice? My advice is you got to be comfortable. You got to be able to sleep well at night. If you want to take off 100 shares to feel comfortable, then do it, right? You got to feel comfortable with the position and not let it make you lose sleep. If Palantir goes back to 40, I really, it's going to suck, but I buy more. It is what it is. It's just the conviction I've developed. And again, everyone has their own stock where they have that massive. For quantum, if you're big on quantum right now, you probably see this as the best opportunity and everyone's stupid and you probably are super happy. Quantum now going red. But it really just depends on your conviction and if you need the money or not. But it is the price of holding a name like Palantir. It's not unique to Palantir. Tesla, Amazon, Nvidia. If you've held a generational company for at least a decade, the price to pay is volatility. That is what you have to do to get a chance to even qualify for those gains. American Airline is up because of Delta. Is United up as well? United's up 5% on Delta's earnings. Wow. Did not think airlines were going to be the ones that outperform in the first 10 days of January. But nonetheless, they are. Thomas says half of the community is just randoms that bought it without knowing the first thing about it. I will agree with that. I mean, I don't know if it's half the community. I don't know if it's 30%, but there is a decent amount of people in Palantir that don't know anything about Palantir, and they just bought it because it was going up. And for those people, I mean, I have nothing to say to you. It is like, this is just the nature of markets. If you buy it at 75 because everyone's buying it and you think it's going to the moon without actually caring about anything about the fundamentals, then you kind of deserve to lose. It is what it is. And I would feel the same way about myself if I buy some stock just because it's going up and then it goes. It's like I have no one to blame but myself because I have no idea why the stock is up or down. TMDX is down 15%. That one's just getting demolished today by Scorpion Capital. What was Scorpion Capital's last good short? Does anyone know? What was Scorpion Capital's last really good short? Let's ask ChatGPT. Let's see if she can do this. What was Scorpion Capital's last big short report on a stock? If ChatGPT can answer this, I'm going to be impressed. I'm going to be very impressed. Okay, so she doesn't have access to the information. I'm going to click the search thing on ChatGPT. Okay, it says search is unavailable. I'm going to go to Grok. Let's go to Grok. Let's see if Grok can do this. This is where people start to use other LLMs if they don't have the data. Grok. Let's see. Grok said TMDX, but I want the other one. Okay, it gave me an answer. I think you guys can confirm this for me or not. HRMY, Harmony Biosciences. Okay, so let's see if that's accurate. What is this? HRMY? HRMY. Let's see how accurate that is. I don't know if that's accurate. I don't think we see that. I don't think they've ever shorted HRMY. Or it is? I don't see it on Twitter. HRMY stock, this thing, Biosciences. Well, if they shorted in the past year, it's not worked because it's up 7%. But it looks like TMDX is their big one, down 13% here right now. Try Gemini? All right, we'll try Gemini. I haven't been using Gemini as much. I should be using it more, especially because it's connected with Google, so it has search. Okay, Gemini. Let's see what Gemini says. Let's see if we get anything better here. Oh, wow. We got an action. Berkeley Lights. I think that might be accurate. BLI. Let's see. BLI stock. BLI stock. I think this is right. I remember this. Are they even a stock anymore? Or are they gone? I think they might be gone. I think that's right. I think it is BLI. Do you guys remember this? I remember covering this on the Market Open. I think it was months ago, but I remember Berkeley Light. That name is so familiar. All right, looks like Gemini did the best. Looks like Gemini so far did the best. Insurance ETF down 2% right now based on what's going on in California. MSTR flat. Walgreens is up 24%. Again, good earnings. If you're buying Walgreens here, though, you got to believe in a turnaround story. And maybe that earnings is signaling there's some turnaround. But that's what you would be believing in. AMD is down 5%. NVIDIA is down 3.3%. Market continues to get a bit hit. Archer down 10.5%. And Tesla, where is Tessie? Robinhood, 39.75. Tesla's 389. So Tesla not holding the 390s. Tesla 389. ChatGPT said Ginkgo Bioworks. Yeah, that's from 2021. I think they've shorted some stocks since then. But Ginkgo was a good short also. All right, let's see what other headlines we've got going on. So we do have some updates from Trump. He spoke with a bunch of senators yesterday, and I think you guys have all seen the Trump-Obama picture by now, right? You've had to see this thing. And this thing is pretty wild. So there is Trump and Obama at Jimmy Carter's funeral. They are laughing and talking. It was quite a moment. I mean, the media does paint these people as legitimately hating each other, and they're over there sitting together laughing. And it's one of those things where it's like, all right, do they actually hate each other, or is that how the media paints it? This is what Trump had to say on that interaction, and then we're going to get to what he's talking about in regards to some of the other things he was talking about with governors yesterday.
Off the top, you mentioned the Carter funeral today. What were you talking to Barack Obama about?
It did look very friendly, I must say. I didn't realize it. I didn't realize it, how friendly it looked. I saw it on your wonderful network just a little while ago before I came in, and I said, boy, they look like two people that like each other. And we probably do. We have little different philosophies, right? But we probably do. I don't know. We just got along, but I got along with just about everybody on that. We met backstage, as you know, before we went on, and I thought it was a beautiful service. But we all got along very well, which is good.
In California.
This was my favorite part of Trump meeting with the governors. He was talking about all the people that have met him at Mar-a-Lago, and this is what he said.
Jeff Bezos came, Bill Gates came, Mark Zuckerberg came. Many of them came numerous times. The bankers have all come. Everybody's coming. Jeff Bezos.
I thought that was the best one for some reason. I don't know why. I thought that was a funny one. So basically, Trump's saying that obviously a lot of people have come to meet him at Mar-a-Lago, but I don't know. That one was that was a good one. So the point is, Trump met with the governors yesterday, and Trump talked with them all about different policies, California, how they're navigating with all this stuff. Look, to give Trump a little bit of credit here, he did say that California needed a lot of water back in 2018, and that we should have, been doing something about these fires. And Newsom was a little bit worried about certain fish that were, potentially going extinct. And because of those fish going extinct, Trump, Newsom decided not to take more water. And obviously, it's resulted in not having water in California, which is not the best. So I think a lot of the politics are going to be attached to it, but we're going to see the economic impacts of it as well. All right, market's taking a little bit more of a dump, folks. We're taking a little bit more of a dump. Rocket Lab down 2%, MSTR down 1.3. Where's the S&P? SoFi back below its intraday low. So 10 a.m. we're putting in new lows. 10 a.m. we are putting in new lows. S&P at 580. That's down 1.5. So we are actually getting more lows than we had in 940. These are like true dips below that intraday. 10:30 might be the third slam of the day. Maybe we get a reverse or maybe not. Yeah, see, but see, this is what we need for a real dip to happen. You know what we need? It's a slow, painful grind to the dippy dip. What we need is to be this low by 4 p.m. and then Monday for it to go down another 1%, Tuesday another 1%, then it recovers a little bit, and then the next week it falls even further down 5%. Like that's what you need to really get to the point where things are bad. Because if you get the whole it's down 10% in a day, no one's going to believe that. Everyone's going to buy stocks. They're going to be like, okay, this is a great opportunity. For it to really be bad, it's going to be a prolonged dip over the next few weeks. Now, granted, Trump's in office in the next 2 weeks. And on day one, he might sign a bunch of orders that gets the market excited. It also might get the market thinking inflation's not going down if there's a ton of tariffs. But I guess that's what we're going to have to see in terms of how this plays out. When people talk about climbing a wall of worry, these are the days people are talking about. Yeah, 100%. Agreed. And then CPI would have to be another reason that causes this. Trump won't allow the market to dip. I mean, we're going to see, dude. I mean, it might be out of his control in the short term. I think long term, if the market gets bad enough, definitely he's not going to let it get bad because he, is measured by the stock market. Nvidia 134. Wow, Nvidia chopping off another 100 billion in market cap. But I do think in the short term, you just don't know, dude. With this type of unemployment data, with the market pricing out rate cuts, with the 10-year being this high, the only thing we have left is earnings to really show that this is not a market to sell off. Or it's just not a market to super get excited to buy, right? Like, I don't think anyone needs to sell their stocks because of all this macro stuff. Because again, it's all macro and earnings, I think, drives most of it. But it also doesn't mean you have to deploy a ton of new cash. Because why would you if there's a better opportunity coming? What would suck for 2025 is if cash really is the best option, which I don't know, dude. I can't buy into that. That's a really hard pill to swallow, that cash is going to be the best option. I think earnings growth would have to be just abysmal for cash to actually be the best option. QQQ down about 2% right here. And I don't think that's going to be the case. I think earnings growth is going to be good. Microsoft 417, that's down 2%. Apple at 236, that's down 2.3. Enphase down 4, Rivian down 2.8, Uber still green, Ulta's up a little bit, Kohler's down 15%. All the spec names are getting hit except 2 quantum names. Or one, D-Wave is up 1.6. Everything else getting hit. Yeah, we're still not at levels we're still not at levels from December 2020 Christmas Eve, right? Right, we're still not there yet. Like Hood has to get to 34 for us to be there, right? S&P has to get to like 575 for us to be there. We're still not, like Christmas Eve was worse than this. Christmas Eve was worse than what we're seeing right now. So it's like, as much as this might suck, again, not across every single name, but for the broad majority, Christmas Eve still hit hard. A lot of these names haven't really got to those levels yet. I put it in order for grab. We'll see if it fills. Has it filled yet? No, it hasn't filled yet. I put it in order. We'll see if it fills. We'll see if it will. Look, I like grab here, but you just got to remember, again, it could go much lower. And my position's already built, so I don't have any urgency to buy grab unless there's a really big dip. 440 is a nice dip, but if the dollar keeps going up, grab's going below $4. It's just that simple. You got to be real with ourselves. And then it's trading at almost half cash, and that gets very exciting. But I do think Trump's going to try his hardest to get this dollar to come down. Michigan consumer expectations, is that out? We have Michigan consumer expectations. Is that what caused the little increased dip that we saw just now? Yeah, okay, that came out just now. That came out. Okay, so Michigan consumer 73.2 from 74. 74 was the highest in 8 months. It's below 73.8. The expectation sub-index dropped to 70.2. Okay, so basically this index is saying, consumer might not be as confident as they were in December, which is not the best thing to compound to a unemployment rate that the market doesn't like. So that could have been the reason we got a little bit of a hit as well just now. I don't know. These things are different, dude. The market cares a lot about Michigan consumer sentiment, but 73.2 versus 74, is that really that big of a deal? We have to see substantial evidence that the consumer is not spending as much as they were. Remember that whole debate we were having in 2024 about, is the consumer real? Is the consumer have money? There was like 3 weeks where every headline was the consumer is struggling. And then Q3 earnings came out and everyone was like, no, the consumer's fine. Like maybe they're not spending money at Starbucks, but they're spending money at Dutch Bros. Maybe they're not going to Disney World, but they're buying more Netflix subscriptions and they're getting their entertainment that way. So that narrative came and went so quick. I'm acting like Trump right now. But then it wasn't a thing. So we have to see if there's enough juice for that narrative to become a real thing. Okay, let's get an update on that consumer data, and then we'll get an update on jobs as well.
Morning, when we had a hot jobs report, which most likely isn't going to take any pressure off sticky inflation. And of course, we are pricing out interest rate cuts. As we sit right now, we are at 4.97 in a 30-year bond. That's up 4 on the day. Its high watermark, 5%. Sarah, back to you.
Yeah, just all of it. Bond negative this morning. Thank you very much, Rick Santelli. Let's talk about jobs for a moment, because this was kind of a blowout report. 256,000 jobs added for the month of December versus 165. Some had 155 on expectations. And the private sector in particular, very strong, which is just notable because the government has been doing a lot of the work in the last few months in terms of job additions. So private sector added 223,000 to that. It is a strong read, and I think speaks to the confidence factor. Rick mentioned consumers on current conditions looking up, businesses too, in terms of hiring expectations. I feel a little vindicated highlighting some of these business surveys in recent days about how businesses, small and large, are just feeling good about the outlook. What do they do in that kind of environment? They hire. And that's what we are seeing. For those that were worried about a softening economy and a softening labor market.
SoFi's down 5%, folks. SoFi's down 5% right now.
You just don't see it in reports like this. The unemployment rate unexpectedly dropping to 4.1% versus 4.23%. The average hourly earnings still going steady, 0.3% increase on the month. And it's good news because the prior month was 0.4, so a little bit cooling off from there, but still strong. If you look across the racial breakdown, it was good because everybody got a drop in the unemployment rate. Asian, white, Hispanic, Black, or African American, which is obviously still elevated, but the rate comes down. So it's all good news. And as Rick said, we now push out the pause for even longer. The market before this was grappling with maybe June or July. Now it looks like October for the first rate cut. And next week, we're going to get CPI, guys. And I do wonder if we get a hotter number that could correlate here with these inflation expectations rising, if people start talking about rate hikes. I don't want to put that on the table yet because nobody's necessarily talking about that. It's not getting priced in. We don't hear Fed speak about that, but we are talking about a more prolonged pause. And I'll just add one piece of corporate anecdotes, which we love to put in. Delta CEO this morning, when commenting on the demand that they are seeing, I mean, take a look at this. Super strong demand. As we move into 2025, we expect strong demand for travel to continue, with consumers increasingly seeking the premium products and experiences that Delta provide.
Okay, so Delta, that's why all the airlines are moving up today, because that means the other airlines are going to say the same thing on their earnings. So consumers are traveling. They've got money to travel. That's good for the economy because you're traveling, you're buying food, all that stuff. But that might not be the best for inflation. So again, the market's going to have to balance. Do we want people getting on flights and traveling and spending money? Or do we want them staying at home and not putting that money into the system? And I think the Fed's going to have to figure out which one do they like more. And that's going to determine if we get cuts or not.
The only bummer, David, is that this
Yes.
good news on the economy is bad news for stocks.
Well,
because
it's
it means
bad
higher
news
yields.
for yields, which is then bad news for stocks, which is why we are down over 2% right now on the Nasdaq. We are seeing all the mega cap tech names suffered pretty significant declines. We got the S&P down 1.6% as well, Sarah. So, all right, we had a 10-year approaching 4.8% in the yield this morning, a bit below that, but close to it. What are your thoughts here in terms of no recession in sight for sure. So what are we thinking?
No recession in sight, but you do have to wonder whether the increase in yields now presents a bigger economic headwind, not just to valuations, which we see across the tech sector, but ultimately to the economy. This was a time we thought the mortgage rates were going to come down and we're going to get some relief. But guess what? We've seen the number of bankruptcies go up because interest rates are high. And I think that surprise, even though it is happening for a good reason, because the economy is stronger than expected,
Yes.
which we want, could be a headwind, especially at a time where the Fed has been cutting rates. And I think it also raises the question about whether they should have been cutting rates as much as they have been cutting rates, 100 basis points last year,
Also
which I've raised repeatedly.
Meantime, the Canadian foreign minister says they're going to discuss some retaliatory tariffs against the U.S. at a meeting, which is also sort of in the ether, the notion that tariffs might
Could be more
drive some prices
inflationary.
as well. Yeah.
They also had a very good jobs report in Canada today as well.
Meantime, on all of this, let's get the Fed's take on the latest jobs number, at least. Our Steve Leisman's here at Post 9 with a very special.
Okay, we'll go back to that. Oh no, they have Goolsbee. All right, guys. I think we got to see Goolsbee. We got to see Goolsbee. What does Goolsbee have to say about this? Here we go. Let's listen to what Goolsbee wants to say. Real quick, where's Tesla? We're still dipping. We haven't made a low yet. Tesla 385 down 2.5%. S&P below 580. 579 on the S&P. Down 1.6% so far. So we are, I would say we are definitely red for now.
What, double the estimate? How does it make you feel about, first of all, the U.S. economy? And I think, second of all, whether or not jobs are increasingly representing a source of potential inflation to you?
Well, I think you're never going to hear me complain that we got 250,000 jobs. I think it's a strong jobs report. It makes me further comfortable that the job market is stabilizing at something like the full employment rate, that as we went through the fall last year, there were some danger signs. You had seen the unemployment rate ticking up for a fair bit, and now that's stabilized. It's even come down a little bit. So I think that's part is strong. I think there's still a couple of question marks about over-indexing on individual job months. As you know, we've been up, we've been down, we've had hurricanes. Now we got fires. We'll have to see what that's going to do to the numbers. And we had quite a strong Christmas season. And if you look in these jobs numbers, you had a very big positive private sector job growth in the retail sector. So we're going to still have to process through, was that a sign of the season and then it will slow down, or is that a sign of general consumer confidence and consumer spending is going to remain strong going through the beginning of this year?
Austin, the chair and others as well have said that they do not see the job market as a source of inflation. Is that changing in your mind?
That has not been changing in my mind. I don't see it as a source of inflation. If you look at wages for 2024, I think the wage number was 3.9% growth. That's pretty close to consistent given what productivity has been running with 2% inflation. So thus far, to me, the job market looks like stabilized at full employment, not an indication of overheating.
There's so many things to ask you about. I know my colleagues are eager to do so, but one more from me, Austin. And you have interest rates really going the other way. Is that consistent with your outlook and what the economy needs? Is it something that the Fed needs to address? And how do you explain why the Fed cuts rates in the long end has gone up so strongly as it has?
Well, look, if you look at the long rate, for the people who say that's because of expected inflation, that can't really explain it. If you take the TIPS measures of what inflation expectations are, that explains at most maybe a third of what's been happening. I think some significant component is factoring in that if growth is going to be higher than what people thought, the Fed's the speed at which the Fed is going to be reducing down to neutral is slower than what they thought is going to be a more shallow rate path, if you want to call it that. And so that will affect long rates because they're just adding up a whole bunch of short rates. And I think there's a fair bit of uncertainty about policy, coupled with, as Sarah was saying, you've seen an uptick in some business confidence. And if you think the growth rate is going to be higher, I think that could be contributing to it as well.
So do you still want to be cutting rates this year?
Look, it's not what we want. It's what will the conditions authorize or justify. I still think, look, for all the discussion about inflation, if you take PCE inflation, which is our 2% target, and you ask over the last 6 months, what has inflation been? The answer is 1.9% through all of the bumps.
He is right about that.
The inflation rate since the bump in first quarter of last year, we've seen pretty stable inflation that's been coming in around where the target is. Even the core has come down. I think the last 6 months core is about 2.2. So if conditions are stable and we don't have an uptick in the inflation rate and we keep having them come in around 2% with stable and full employment, I think that the rates should go down to where to what I consider to be neutral. And so 12 to 18 months from now, they would be a fair bit lower than they are today. The thing that will explain, justify the speed at which we do that are going to be what happens to conditions.
Well, your favorite topic, obviously, is talking about fiscal policy, Austin. So, and I say that sarcastically for people who don't hear the tone in my voice. But Carl just read a report saying that Canada was considering retaliatory tariffs. So as a policymaker, you can hear things are coming and going to happen. You have to think about them. How do you process it?
Yeah, look, you have to think about them. We're not political pundits evaluating what's the probability that X, Y, or Z thing is going to be proposed or is going to pass. But anything that affects prices or employment, the law says we have to think about that because we're setting the monetary policy to stabilize prices and maximize employment. Now, that said, once you start going down the rabbit hole or rat hole, or I don't know what kind of a hole it is about, say, tariffs, then you got to start saying, okay, well, wait a second, doesn't the economic principle say that the Fed should respond to longer term or permanent inflation shocks differently from temporary inflation shocks?
Right.
Is this a one-time increase in cost, or is this a persistent inflation shock? And can you tell the difference? Stuff like that becomes more complicated. And if there's going to be retaliation, it becomes even more complicated still. So,
Sarah, that stood out for me in the minutes.
I try not to get into that. But once we actually have concrete proposals of what the government might do, for sure the Fed has to think about how will that affect the dual mandate.
Sarah, that stood out for me in the minutes, that line that said, we can't tell if it's permanent or transitory when it comes to some of these shocks that are coming our way.
That's the question.
Yeah.
Nobody really knows, and you kind of have to just roll with it. I still think, though, that President Goolsbee, it's at 2.8%. And on the same side, there's not a lot of evidence that the policy has been super restrictive on the economy.
Well, let's take those two important topics, but they're kind of different. On PCE inflation.
But they're similar in that
if you take PCE inflation, the 2% target, in the last 6 months, PCE inflation has been 1.9% over that time. Core PCE inflation, 2.2% over those 6 months. The annual number that is high is largely reflecting that in the beginning of last year, we had an uptick in inflation. There's no question about that. So it's wrong to say that is not progress recently. That's just the way we add up the numbers. If you make a 12-month moving average, you got 12 months of persistence in it.
But don't you target the annual rate of inflation?
Seasonality.
Isn't that the target?
the actual rate of PCE inflation for the last 6 months has been 1.9%. So if we got 6 more months exactly like the last 6 months, we would be below the target. So I just want us to put in context the reason why the inflation looks sticky, in my view, is because we had a blip up in the inflation rate almost a year ago. So it's wrong to look at something that's a 12-month moving average and act as though what's happening is something that's happening in this month, when what's happening is things are dropping out the back from 12 months ago.
Austin, a big part of, I think, underlying Sarah's question there is criticism coming to the Fed that you guys cut 50 in September, you cut 25 and 25, you brought it down by 100, and the economy's done nothing but strengthen. And I guess one question that comes from that is, you have said repeatedly, and I mean this, the Fed has said repeatedly, that there is still restraint in the funds rate. It's just real hard to see that restraint out there now. Where am I missing it, Austin?
A lot happens, as you know, in the macro economy that has nothing to do with the interest rate or the Fed. And so you got to kind of try to separate those out. What I try to do when I'm looking for restrictiveness, A, we have the historical comparisons, but B, go look at the interest rate sensitive parts of the economy, because that's where you should see it. I think in several of the more interest rate sensitive parts of the economy, you still see the impact of restraint. Now, if we're getting an uptick in business confidence and it's going to lead to, on its own merits, having nothing to do with the interest rate, an increase in animal spirits and sentiments for investment, yes, we got to take that into account. But the question is there evidence of overheating of the economy? And so far, as I say, in recent months, for all of our discussion, there's not a lot of evidence that the economy is overheating. As I say, the PCE inflation rate over the last 6 months has been 1.9%. And the unemployment rate has stabilized at something like full employment.
Financial conditions are undermining your view that policy is tight, aren't they?
And autos did 16 million.
Financial conditions, they don't suggest that your policy is too tight, do they?
Well, be careful with financial conditions, because there's a massive reflection problem, as you know, that if we announce that we're going to be tighter, then that will reduce the stock market, will react badly. Financial conditions can go the other way, and it just our actions reflect in the stock market, and they don't become a reason for the Fed to change its strategy. If the market thought that the Fed was going to succeed at the soft landing and the market went up for that reason, that would not be a reason for the Fed to start raising because financial conditions ease. That would just be a reflection. I think the long rates going up, if they start getting driven by inflation expectations,
right,
that would be a concern. That inflation expectations, like the ones that we're citing from the University of Michigan, but I prefer the more market-based expectations. But I put a lot of weight on that, because that's a critically important part of trying to figure out, is this return of rates to something like what they were from the spring, and the renormalizing, de-inverting of the yield curve, is that a sign that we're returning to normal, or is that a sign of something else? That I think in expectations
and the
is important.
The data do show that, Austin. We've shown that data showing inflation expectations up a fraction of what the 10-year is up. Austin,
exactly.
You and I met decades ago.
I guess
you were a University of Chicago economist. We met at economics conferences, and we would talk about the wonkiest possible things out there. So I'm going to continue that tradition right now. Productivity is higher. Does that mean a higher neutral rate for the Fed? And how much do you think that productivity, along with the demand for capital that's come along with AI, might be responsible for the increase in the long rate?
It depends if the productivity increase, the productivity growth rate increase is permanent or transitory. If it's transitory, it doesn't. If it's permanent.
Why does the Fed love that word, bro? Why does the Fed love that word?
For sure, it raises the growth rate of the economy, and it raises R star and what you think is neutral. If this is a front loaded that it's going to go away and we're going to go back to normal, that presumption is no longer true. I think that productivity number, I love that you're watching it. I think everybody should be watching that. Just be aware it's very noisy, but there's nothing more important as a data series than what we think trend productivity and therefore potential output growth is for the economy, because it's going to determine whether you think there's overheating or not.
Right.
You can't take a number, a monthly jobs number, for example, of 250,000. You say, is that a sign of overheating? If productivity growth is higher than what it was before, you really can't say that. You got to be careful with aggregate numbers when the productivity growth rate is moving around like this.
Austin, we're always grateful when you join us, especially on days like this when the market is moving on data and everybody is desperate to understand just what the heck's going on. Thanks, Austin.
Anytime. Great to see you again.
All right. I have someone to help me break down what we just heard. Mr. Stephen Fiorillo, you're on the Market Open.
No, I'm not here to help you break down anything. I was not really paying attention. I was just telling you that there is something very interesting happening, and there is a particular company that we were talking about in a sea of red that is actually up today, and I think it may have bottomed.
Hold on. So you don't want to break down what Austin Goolsbee just said from the Fed?
No, because they're not talking about the right things.
I thought that was actually a good interview, to be honest. I thought
Why is nobody talking about the correlation between the Fed fund rate and the 30-year fixed mortgage?
Okay, so the stock you're talking. So what stock are you talking about?
We can't talk about the stock I'm talking about because we haven't voted yet.
No, but what?
I didn't realize that you were still live.
I told you I'm live, Steve.
Well, I'm doing a million things right now. Not a million, but three different things right now.
Okay, so maybe we can talk about that stock later on the market close. But in general,
later today because I'm probably going to buy it before the market close.
Okay, cool. So we'll talk about it in the market close. But in general, look, unemployment data, it came out, we're 4.1%, added 100,000 more jobs. Is that any noise to you, or it's just it doesn't matter?
Adding jobs is good. In what point is Americans having jobs bad? I mean, come on. The reason inflation is not coming down where they wanted to is because of the housing market. How many times do we have to go over this? You can't have bring up for your viewers, go to St. Louis Fed or Fred economic data, whatever you want to type in, and on the chart, do 30-year fixed rate mortgage and the Fed funds effective rate. You can't have the Fed funds rate and give free money out of the financial crisis until basically 2016, 2017, and have mortgages under 5%, and then a little blip up, which makes it tip over 5% quickly. And then it come back down after the pandemic because the Fed funds rate is at 25 bips for a year and a half. Golden handcuff comes in at 3% because people who had 4.5%, 5% mortgage are refinancing at 3.5%. And then the Fed funds rate goes up, and now mortgages are over 7.5%. You want rents to come down? You want those last pieces of inflation to come down? There's two things that are going to help. Oil coming down, Fed funds rate coming down. Because in order for inputs to come down, you need
oil's up today. Oil's up 4% today.
Well, it's up on a scare.
Oh, so you think it's BS?
I'm not saying it's BS, but they're scared about U.S. sanctions.
So hold on. In 2024, there was a narrative that good news is bad news. Are you saying that narrative is not going to be the same in 2025, where more jobs?
Look, I don't know what's going to happen, but good news should be good news. The bottom line is that there is real economic data in a correlation between the Fed funds rate and the 30-year. And what has everybody been saying? The housing market is still a problem. Rents are still high. Well, the only way to get rents down is to lower the cost for the owners that are renting the properties out. The only way you do that is lower mortgages.
And the only way you do that.
Sorry, but that's the truth.
No, I agree. And the only way you do that is lower rates. I think that's also, I don't know how much you heard of Goolsbee, but he was kind of fighting back against them saying that they're not restrictive enough. He said, if you look at core PCE, it's below 2%. It's been like that for 2 months. So, I mean.
Got to get rates down to 3%. Have to get rates down to 3% on the Fed funds rate.
Yeah.
Because then you have a chance at interest rates coming down to 5% on a mortgage.
All right. I'll talk to you on the market close. I'm interested about this stock because I don't even know what stock you're talking about.
You know what it is. We talked about it the other day.
Steve, I actually I'm not even kidding. I have no idea.
You know what it is. The five of us talked about it on the Zoom call.
What letter does it start with?
I can't tell you that.
Dude, I actually don't. I'm not even playing. I don't know this stock. I don't know.
All right. So
I was on the Zoom call for 10 minutes and then I had to leave.
All right. Look at your phone. Hold on.
But make sure you buy it so we can talk about it on the close today.
Yeah, I'm going to do a starter position for me today. Look at your phone.
So what? $1 million?
Look in the.
There's no way it's this stock. There's no way it's this stock.
Yes, it is.
There's no fucking way in hell it's this stock.
It is up today. Yes.
There's no. See, I wouldn't have guessed this in a million years. I wouldn't have guessed this in a million years.
Type it in. It's up today.
If I type it in, I'm typing it in live.
It's actually moving right now.
All right, so everyone's gonna see what I'm typing in. I'm just saying.
No. You can't do it live. Do it on your phone. What are you doing?
Oh my god, guys, trust me. This is not. All right, I'm not gonna tell them, but my interpretation is I'm staying away from this. But
this thing's running right now.
I'm staying away from this. That's Steve. I don't remember us talking about this stock at all. I thought you were gonna say like an energy.
We talked about like 40 minutes on the Zoom call.
No, I wasn't there, dude. I had to stream the Jensen thing. Remember?
Oh, that's right. You were part of the Cool Kid Club streaming Jensen. I get it.
That's why this stock. That's why this text. I can't believe that this is the stock you're thinking of.
We talked about it for 45 minutes. We went through a lot of data about it. And after going through even more data, I'm feeling really good about it.
I'm not buying this stock. There's no way.
I'm not telling you to.
I'm not buying. All right, buy it.
I'm telling you that I think it buys.
Okay, buy it on the market close, folks. We will disclose whatever this stock is that Steve is. This is ridiculous.
You really don't like this play?
No, not at all. I don't hate it, but I'm not putting
Usually
in.
I'm the one that's like giving you a hard time about buying something.
Yeah, usually you give me a hard time. I get to reverse it. I'm giving you a hard time.
Usually I'm the voice of reason.
I don't like it. But I don't know. I feel like
it is. Look at this. It's running. Look at it.
you have the whole chat. Can we just tell the chat? Everyone's guessing. Can we just tell the chat?
Tell them to stop guessing. They're never gonna guess.
No, like 5 people already got it. I'm looking. I might as well say it. Yes, dude. There's not that many stocks that are running today. If you haven't figured out.
No, I have no idea.
Can we just say it, Steve? Can we just say it?
No, because I don't own it yet, so don't say it.
You realize if we say it, it's not going to stop you from. Wait, if you don't own. Wait, hold on. How is you not owning it stopping?
It's bad luck. I don't want to actually say it before I actually am a shareholder. Bad luck.
Okay, look, I respect that because I know people have their superstition. So I'm actually going to respect it, and I'm not going to say it, but
this thing needs to come back down a little bit. What the hell? Oh my god!
All right, guys, be here for the market close to find out Steve's secret stock.
It's going to be interesting. What happened to Palantir?
What do you mean? What happened to Palantir? Palantir is just chilling out at 65. What are you talking about?
Palantir's chilling out at 65.
Palantir's doing its thing, bro. Don't worry about Palantir. It's doing its thing.
Don't worry about Palantir.
What you need to worry about is getting out of these covered calls, and you have an opportunity today, and you should take it.
No, listen, I'm going to have an even bigger.
Don't get greedy.
Not getting greedy.
You want a cheap covered call exit? You might have to pay the piper, but that's okay.
I'm willing to pay the piper. I just don't want to pay the piper a lot. You know?
I get it. I'm just saying.
And you know what's not moving today? PDI, which I should have bought more of.
What's PDI?
The thing I told you to buy like a year and a half ago to generate income.
PIMCO. Okay.
Yeah.
You know what's up? You know what's really up? Delta, bro. They crushed earnings. Airlines up 10%. All the airlines are mooning. Gold's up, silver's up. Walgreens 25%. They had good earnings as well.
Actually, I'm gonna have to log in. I actually think today may be a good day to reverse roll my SL Green covered calls for how much it's down.
Wait, SLG Green is down. SLG, yeah, that's down.
SLG is under 62 right now. Jesus.
So you don't care about this unemployment data at all?
No.
Do you believe we actually added 250,000 jobs?
I don't know. I mean, they say we did. Who knows?
But do you believe it?
I mean, I had no way to disprove it, so I'm not going to spend my time trying to discredit it.
That's fair. That's a fair take.
You know what I mean? I'm not going to waste my time on that. It's just more what do you want? You want people not to have jobs and us go into a recession? I mean, I don't know. That doesn't seem like a good idea, especially with what's going on in California. You know, my heart breaks for everybody out there and all the businesses that are destroyed, lives are destroyed, schools that are destroyed, kids that are displaced from their homes. I mean, why can't good news be good news?
Why can't good news be good news? I agree.
All right. I'll talk to you
Wait,
later.
last question. Are you buying the new Tesla Model Y?
No.
Why not?
Why would I do something like that?
It looks cute.
Well, pretend you didn't say that.
All right. I'll talk to you later.
Okay, bye.
All right. After Steve, we've got Kris. Kris, I'm getting you on the phone. He was just calling just now. Let's get Kris up here and get his thoughts. Guys, I don't like the stock that he likes. I really don't like it.
What up? What up?
Kris, what's up, man? How are you?
Dude, okay, so today's jobs numbers, and Steve, I don't know, I know you just said, more jobs is good. Look, the Philly Fed in December, they actually came out. I sent you the PDF if you want to check it out. They actually said there's been huge revisions in the past, and it's likely that this thing is going to revise lower again, okay? A lot of these Fed presidents, and the reason why Goolsbee is a little bit like, this is kind of weird, is because I honestly do not trust the numbers. The survey data has been shrinking lower and lower and lower. So the inaccuracies are getting wider and wider and wider. And if you look at what they actually put, like there's one thing I highlighted. If you go to my Twitter feed, you'll actually see it. They actually mentioned how much of a miss it was last time, right?
Right.
So go ahead, go down. Go to
your Twitter or stay on the PDF?
No, you can stay on the PDF. Go down further. Go to the last one, so page 3.
Okay.
Are you? Oh, I guess you're on a delay. So there you go. So it's like that. Okay. So no.
Go to the Pennsylvania one.
No. Let me see. Where is it?
I can just go to your Twitter too. I can get that from there.
Yeah, just go to my Twitter. Yeah.
Okay, so you said take jobs data with a grain of salt. And this is the first chart we're looking at on revisions.
Yeah, it's funny. I'm watching you on the market open because it's got, I think, like a 15-second delay. Look at that giant revision downwards.
Yeah.
Right?
Yeah, I see it.
Right there. And they even give you a reason for the revisions right there. As seen in figure 2, benchmark revisions tend to be particularly large in years when unemployment changes are different. Scroll down. Oh, sorry. I guess we're delayed. So scroll down, scroll down, scroll down.
The accuracy of CES preliminary estimates is also affected by response to the CES survey. In recent years, this response rate has been falling, which reduced the accuracy of survey-based preliminary estimates to month-to-month employment changes.
Yeah.
Yeah, so they're basically saying it's not like you have to really take it with a grain of salt here.
Yeah, yeah, and I think we're going to see it. Like, on one side, you're seeing consumer sentiment drop, which means that, people are not exactly most bullish on the current, employment situation, right? And then at the same time, you're looking at the other data, which is showing the ADP data, which is saying, look, job growth is there, but it's not nearly as rosy as these guys are making it out to be. So,
yeah, so the estimate of 818,000 jobs, that was a big one. And then August, that revision as well. So you don't think we actually added 250,000 jobs? That's your point?
Yeah, yeah. Whenever the data actually comes out, the date that we really have to keep an eye on is February 7th. Because that's when the actual revisions come out. And so if the revisions come out and it says, look, there actually was a lot less jobs that were created, boom, now all of a sudden the market runs the other way saying, wait a second, no, the employment situation is not nearly as rosy.
Well, here's the thing, Kris. Do you buy this dip, or do you how do you want more pain?
I think volatility-wise, January and February are never really great months to be in the market anyway. So it might just be, avoid the market right now and find the things that, if they come back to like some semblance of value, then yeah, you could probably add to some positions. But I definitely wouldn't be selling anything right now. I just let the markets do its thing. And I really do hope that the 10-year gets to 5%, because if it gets to 5% and then Trump gets in office and then he starts reversing on some of the stuff that he said, bro, the 10-year is going to collapse. And when it does collapse, TLT is going to skyrocket.
Yeah.
You know? So my thing is right now, a lot of people are anticipating a lot of negative impacts of Trump's policies, and those policies may not actually do what's currently being projected. One of the major things is like a much higher growth rate. So that if the growth rate gets dialed back, then boom, all of a sudden now you got yourself more looser environment. So you can see the crazy level of dipping and up that we saw. Like look at May of last year, what the inflation expectations were, and then all of a sudden that thing dropped 100 basis points, and now we're back up 100 basis points.
Yep.
So, you know, this is where, like I said, this is where we have to keep a track of some of the data that's coming out. For me, I think of housing as like a freight train coming down. The inventory is being added regularly. I'm seeing price cuts come around. Certain parts of the country, you're already starting to see rent deflation happen, and the data is starting to make its way into the ecosystem. So, you know,
do you think that's why Goolsbee was kind of holding his ground against CNBC?
Yeah. I mean, look, if you look at data outside of shelter, it's actually doing pretty okay. He's like, look, it's within the range that we need it to be, you know? So why are we panicking over some 1 month job data? You know? So, and not to mention the data that we're seeing in January, in December, some of it could be just seasonal, you know? Even though if they say it's seasonally adjusted, if you can't trust the numbers, then, you know, when the revisions come out, it's like, wait, maybe this wasn't the most healthiest thing. And look, politically, we shouldn't think that politics gets involved in bias when it comes to numbers, but honestly, it does. And if I was the Biden admin and I was working on BLS, maybe I'd want to put up some rosy numbers right before I left so I can say, look, y'all elected Trump, and now all of a sudden unemployment skyrocketed. It's because of Trump. You know, I mean, they're already painting him as a felon today, right?
Oh yeah, so some breaking news on that. Trump got, I've never heard of this before, but Trump was sentenced to unconditional discharge by a New York judge around the hush money stuff, which means it's a legal term used in the context of a criminal system when someone is sentenced, but there's no actual like jail time, essentially.
Yeah. So now everyone gets to say, well, he's the first felon as a president.
He's gonna sell some shirts with that felon screenshot on him, or his mug face. Kris, what do you think about Meta and TikTok? What are your thoughts on those? I
mean, look, I think TikTok should be banned because, I mean, there's just so much. I don't even put it. I get the freedom of expression, everything else, but I feel like TikTok has this algorithm that basically highlights the lowest parts of society and glorifies that part, and then our society continuously moves towards that direction, right? So it's almost like, yeah, it's freedom of expression, but it also is like corrupting influence as well.
Well, the CCP wants American kids to be stupid. I mean, right? Like,
yeah, I mean, they don't show the same shit to their kids.
Not at all. They do not show. Yeah, they don't show even half of this type of stuff. I agree. So okay. So if it gets banned, you think it's bullish Meta or Google, or which one would you pick in terms of who benefits?
I mean, it will benefit Google, but it's gonna greatly benefit Meta and Snapchat. That's why I think Snapchat is running kind of hard today.
Yeah, Snapchat's up 9% right now. You're right.
You know? So that's where we have to just keep an eye on these things, because Snapchat has a feature that's very similar to TikTok, you know. So like, they're young. I know a lot of kids and younger people, they use Snapchat. You know,
Snapchat has 450 million daily users, which is hard for me to imagine, but 800 million monthly actives. But yeah, it's a lot of teenagers that use.
And look at the market cap. Look at the market cap on this thing.
Yes, it's 17 billion. No, 21 billion. No.
Right? So it's much, much smaller. So this is where I'd say if the TikTok ban does go through, Snap may be the place to look. The one thing is, I'm not one of these young kids, so I don't know if Snap is something that people use.
No, they use it. Like it's a big thing. The problem is they don't have any money, so they can't buy anything from the ads, which has always been the issue, right?
I guess, but the thing is, like, the next generation could be 15 million paying monthly. I mean, like I said, we should probably do more research in Snap, to be honest with you. We just really should, because if this TikTok thing does get banned and this ends up being something that's monetizable, yeah, I'm sure that there's going to be a good amount of people that go towards Instagram Reels. But I wonder if Snapchat could also have, like a jump in advertising. You know?
Yeah, it's fair.
Instagram, like I said, Reels is definitely going to pick up a lot of stuff. So, you know. But so the way I play this is, well, I'm already long on Google because of other business segments that are doing really well. But if more advertisers are coming back to Google, that's great for us, right? On top of it, Meta, which, is a very profitable company, already buying back shares, already a leader in AI. If they get the benefit of a TikTok ban, bro, Meta can easily get to like 800 plus.
Do you think TikTok would actually allow their U.S. business to be sold to a conglomerate, or there's no way?
I don't think so.
I don't think so either. I don't think they would give up control. I don't think so.
I mean, the fact that they're not giving up control speaks volumes about how the CCP is actually like, listen, we would rather burn this thing to the ground than sell it off.
Yeah.
I mean, that's kind of nuts if you think about it,
I agree.
Yeah.
All right, Kris, thanks for some of your clarity. I guess we have to wait on jobs data in the next month to see how accurate this is.
All right. Take care.
Take care. Talk later. Well, we are getting a little bit of a recovery, folks. I mean, it's very little, but it is a bit there. Tesla just went green. Look at that. United still up today. Again, United, just talk about stock of like the past year and a half, dude. I don't think anyone expected an airline to be up more than 100%, but United ended up doing it. Lowe's is up a little bit. Home Depot, Walmart, Target, they're all up. Robinhood recovering a little bit. It was at 38.78. Now it's at 39.82. Someone said Tesla hit 377. Did that actually happen? No, it hit 383. Maybe some of you guys saw a wick to 377 on your brokerage. On Webull, I'm seeing 383. 377 would be a pretty nasty wick if it was there, but didn't see that. Nike's up. Constellation's up 25%, and they acquired a company, and they're still up. Usually the company that acquires takes a haircut because you're dishing out billions of dollars to get a new company. So, technically you're losing money for the short term, but I guess the market really likes that acquisition, and they're up. On Schwab, there was a 377 wick. Well, if you were there at the moment, maybe you could have got some Tesla that cheap. Again, I still have puts at 375. Here's my plan for that. If Tesla, and they're after earnings, if Tesla goes to like, I don't know, 370 after earnings, I'll just let my shares get assigned. My cost basis would be 360 because I got basically $15 a premium. If Tesla tanks to like 320, I would roll to 375 and then I would just buy the shares outright. So if we go substantially below 375, which I don't think that happens, but you never know, then I just roll it. I'd buy the shares outright because I think we'd get back above 375 eventually this year. But if we stay in this range, then I might not have to get assigned on the shares. But again, it's all going to depend on earnings on January 31st and see what happens there. Palai says I had an order at 378 and it didn't go. Yeah, you have to be quick on that one. That one you have to be quick. Hood back to 40. Dude, Hood's a champ. It's getting up there. 39.88. It's getting up there. It's absolutely a champ. Even Palantir holding above 66.5, bro. That's a champ. I think Kris is right about this idea that Goolsbee, and we could see the tension with Goolsbee, right? With CNBC. He's like, what are you guys talking about? We've done a really good job. And they're like, yeah, but you're not restrictive enough. He's like, are you looking at the actual numbers, right? Are you looking at PCE, which is what we actually care about, not your headline CPI? And so he was really fighting back. He was just like, no. We've done a decent job. The 10-year is reacting to a hot jobs report, but that jobs report does not mean we haven't been restrictive. And just because people have jobs does not mean, we've done nothing to be restrictive enough, given inflation at one point was 10%. I think maybe that calmed down the market as well with Goolsbee being a bit more like, no, we actually did do a decent job and inflation is coming down. Here's the update on Trump. So let's get a quick update on that. And then we'll keep going from there.
just within the past couple of minutes, sentencing Trump to unconditional discharge. That means he won't face any jail time, any fines, any penalties of any kind in that case. The judge saying that this ruling on the sentencing is due to the president-elect's status as president-elect. He said Donald Trump, the ordinary citizen, and Donald Trump, the criminal defendant, would not be entitled to such considerable protections. Trump himself, speaking to the court today remotely, said this has been a political witch hunt in this case. He said it was done to damage my reputation so I would lose the election. The judge then going on to sentence him to unconditional discharge on all 34 counts of falsifying business records that he was sentenced to last year. And David, as the judge produced this sentence, he said to the president-elect, I wish you Godspeed for your second term in office. Back over to you guys.
Okay. Eamon, thank you. Eamon Jabbers. Wildfires around Los Angeles continue to spread. 10 people have now died. Evacuation orders have expanded. They total nearly 180,000 people. Let's get to NBC News' Liz Kreutz. She has the latest for us from Altadena. Liz.
Hey, David. Yeah, I mean, it's just mass destruction all over this place. It's horrible to see. We are at one of the businesses in the downtown Altadena area that's destroyed. This was an auto shop. You can see all of these charred cars here. And then when you get into the neighborhood, it's just block after block after block of destruction, home after home gone. It's hard to really wrap your head around. And, you know, there are questions. You mentioned the death tolls up to 10, and there's a question of whether it's going to continue to rise. Probably today or in the coming days, first responders will slowly begin to bring cadaver dogs in, where they start to search the properties and look for any potential remains, people who didn't make it as maybe they weren't able to get out. In fact, I spoke to a woman who says that her grandmother perished in this fire. She had lived in her home for over 40 years. And she had said, I've lived through fires before. We're used to this. I don't need to get out. This time was different, though. She sadly did not make it. And, you know, there's so many questions, guys, that are emerging from this now. We have thousands of people who have lost their homes and are evacuated. We live in an area, Southern California, with one of the worst housing shortages in the country. There's no housing already. Where are all these people going to go? Where are so many kids going to go to school? Insurance companies have been pulling out. State Farm pulled out thousands and dropped thousands of people in this neighborhood as well. So there's so many questions about how folks are going to rebuild and what comes next when we're seeing such intense destruction all across LA right now. David.
Liz, appreciate that very much.
Really sad, man. Really, really, really sad. And Kris right here is absolutely correct. You know, we're stressing about our stocks going down 3%. It gives you some perspective, man. Other people have literally lost everything, including their lives. So as much as it sucks that markets aren't going up today on a random Friday, it is obviously nothing compared to what's happening in California. We are getting a little bit of green, guys, but it's not enough where I think we're getting an actual rebound. I think we're going to have to wait a few hours to see if buyers really step in, but they have stepped in. It's a question of how aggressively they're going to step in. Going into the end of the day. S&P was at 579, now at 581. So you do have a red candle right there, but you didn't have enough green to get up to the 580s. And now just a question of if the market continues to maintain momentum or goes back into some downward pressure. All right, guys, that's it for me today. I have to end the stream a bit early. I have to go get a meeting with my accountant, and I've got to go drive for the next 40 minutes, or rather, I should say FSD is going to drive me for the next 40 minutes. So we're going to end it out early here today. I will be back on the market close at 3:45. I would tell you guys Steve's stock, but I don't want to, you know, when someone brings up luck and all this stuff, they're superstitious. I don't want to mess that up. I mean, if he's really that suspicious about saying a stock before he buys it, then I'm not going to mess it up for him. But all I'll say is I don't like it. I don't like it. And I wasn't part of his Zoom meeting as I left early to do the Jensen keynote where they talked about it for 40 minutes. But I guess that 40-minute discussion convinced them enough to get into it. So we'll talk about it on the market close. I'm going to ask him as soon as we call him, like, Steve, what's the stock? Say it now. Say, well, I know it, but say it. And if he says, no, I didn't buy it yet, I'm going to be like, we're hanging up. We're hanging up. We are hanging up. Okay, word of the day is evergreen. I think most of us know this word. Evergreen. If I said that word wrong, then you guys deserve to make fun of me forever. Retaining its relevance, popularity. The band's evergreen songs continue to resonate with fans across generations. Her evergreen tips on finance have made her the go-to expert on major news stations. Finance media, from a content creation perspective, is not really evergreen because we do 2 shows a day and the news changes so quickly. But some of the more long form podcasts that I'm interested in getting into this year, hopefully will be more evergreen. All right, that's it, folks. I'll be back at 3:45. Again, not really a dippy dip, not really people running for the hills. I mean, it's just, but not a lot of people coming in to buy stocks. It's kind of a reaction off the 10-year going higher, unemployment going lower, and the market basically just saying, I guess we're going to wait until Trump comes in and then see where we go from there. I'm not going to clap. I have to take this meeting, dude. I have to take this meeting. I have to go drive and legit take this meeting. Amidst mispronunciation is an evergreen content gold mine. Exactly. That is correct. We still got to get the compilation of all these mispronunciations. We've already had like 5 of them in 2025 already. All right. Thank you, everybody. We'll be back 3:45 p.m. And we will have Counter Weekly today as well at 11 p.m. So we will be jam-packed for today. But I will see you guys on the market close. All right. Bye, everyone. Thank you, guys. I'll let you guys know how FSD is. This is going to be my first longest drive for like 45 minutes with FSD. So hopefully it'll be a good one. All right. Bye, everyone. See you guys on the market close.